the peak of the dot-com bubble, the big five technology stocks were over 50 times price earnings. Today, the Magnificent Seven are on in the 20s, in the mid 20s, price earnings wise. I don't think we can make a case for an extremely overvalued market for the United States. You might be able to make it in some other parts of the stock market where there's been these smaller AI plays that are extremely expensive, or SpaceX, obviously, and some of these big AI IPOs that are coming up too. But for the broader S&P 500 and the big technology stocks in it, you cannot call it an expensive market.
Mark, it's been great chatting with you. And now we've got some big IPOs coming up in the Indian markets as well in the second half of the year. You've got National Stock Exchange, then the Jio IPO. So these are large ones, and they will, to some extent, suck out liquidity in the secondary markets in India. But great chatting with you. Thank you once again. Moving on now, let's quickly tell you the interactions lined up on the show today. So first up, 8:35, we bring you a discussion around the key takeaways from the Reliance AGM, the Jio IPO, 9 a.m. Manoj Gori of Equirus Securities will put the spotlight on consumer durables. 9:20, Mihir Vora of Trust Mutual Fund will be the market master for the day. 9:30, the management of LG Electronics joins in to talk about the impact of the weak monsoon on the business, the road ahead. And following that, the management of Fractal Analytics will join in at 9:40, following the plummeting, the gashes that we saw in IT last week on Friday. Towards the end of the show, Lata will speak to external members of the MPC on the minutes of the June 5th policy.
Time to slip into a quick break. You come back, we go full tilt on stocks. We'll be looking at our top 10 stocks. And for the time being, I give you a sneak peek. Amber, Voltas, Bharat Forge, Uno Minda, PDC Industries, RVNL, Power Mech, GRSE, as well as Texmaco Rail. All of them will be reacting to positive news flow. On the flip side, you have Oro Pharma that will be reacting to negative news flow. Take that break, come back, and further detail on all of these names.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a 70-point uptick to kickstart things. A bunch of stocks on our radar. And as always, our team with us here this morning. Good morning, guys. Happy Monday, so to say. Upasna, you're looking at a couple of stocks this Monday morning. Good news coming in for both Voltas as well as Amber.
Well, certainly. First up, let me start with Amber Enterprises. It recently held its analyst meet, and here are some of the key important updates given by the company on the back of the Oppo collaboration and the strategic rationales shared by the company. Now, the company says that the collaboration is expected to diversify the company's revenue profile and also reduce its seasonal concentration in its RAC business. Given the asset-light nature of the arrangement, the capex requirement here is quite minimal, which is below the 50 crore mark is what the company has indicated. Now, coming to the trial production, it is indicated that it is expected to commence in Q4 FY27 with commercial production with the Oppo collaboration of manufacturing of the mobile phones will be starting from Q1 FY28 is what the management has indicated. In terms of volumes also, it has guided nearly about 8 million units in year 1, scaling to 13 to 15 million units by year 2 of operations. Now, moving on to Voltas, the company has crossed 1 million AC unit sales in FY26 to FY27, and it reaches the milestone in a record time, which is nearly just about first 3 months of the financial year. It is the company's fastest ever run to 1 million unit is what the company has also emphasized, and it has attributed this momentum to strong consumer demand, even the company's continued focus on innovation and execution, and even strategic initiatives taken by the company. The company also says that the demand continues to remain encouraging across the market, and it is certainly looking to build on the momentum in the months going ahead. So all in all, these two stocks on our radar today, expecting green on both these counters.
Thanks a lot for that, Upasna. Well, hopping across to Sudarshan, as always, he's got a list of stocks that he's tracking. Morning, Sud.
Morning, Nigel. We'll start with Bharat Forge has signed 425 crore rupees contract with Ministry of Defence to supply gas turbine generators to Indian Navy, and this contract would be executed over next 5 years. And next one is Minda, another approval under Press Note 3. Company has got the approval for investment by Innovance Auto in Minda Auto Innovations, but this investment would be subject to regulatory approvals that the company receives from Hong Kong and China. Aurobindo Pharma, its subsidiary Eugia Steroids Unit Andhra Pradesh, has received 5 observations from US FDA, and for that, inspection was done from June 10 to June 19. Last one is PTC Industries. Board is likely to meet on June 27 to consider fundraising, and that would be via equity issuance or other securities. So green for PTC, Bharat Forge and Minda, and red for Aurobindo Pharma.
Okay, that's the PTC India, what we've tagged. It's PTC Industries, which is considering a fundraise, and that's the one which closed up with a gain of more than 5% on Friday. But Vinny joins in with more stocks which are in the news. And Vinny, lots of order wins.
Hi, absolutely. Lots of order wins of what we're seeing coming in this morning. We have RVNL that's going to be in focus after they've received a letter of award from NMDC. This is mainly to build a 10 million tons per annum buffer stockpile as well as blending yard in Visakhapatnam. Order value of this is around 2,900 crores approximately. So green expected here. We have Powermech that's also in focus. They have received an order from JSW Thermal Energy. This is for a civil construction work order for 2 800 megawatt of thermal power projects in West Bengal. The order value of this is around 1,000 crores. And do not forget, the order book for the company stands at around 15,800 crores approximately. So green expected here as well. GRSC, the company has officially been upgraded to Navratna status by the Ministry of Finance. So positive moves expected here as well. Texmaco Rail, 2 orders. One is a 253 crore order that they've received from JSW South Rail Logistics. So that is a positive one, as well as another small order from Odisha Power Transmission of around 11 crores. So both these things could keep the stock on the positive side as well.
All right, Vinny, thanks a lot for that. We'll thank the entire team on that note. And in case you missed all the top stocks that we're tracking this morning, here's a quick recap. Stocks with positive news flow. We have Amber Enterprises, Voltas, Bharat Forge, Minda, PTC Industries, and RVNL along with Powermech projects, GRSC and Texmaco, while Aurobindo Pharma is the only stock which is likely to open in the red. With that, let's go across to Manisha Gupta for a quick roundup of all the action coming in from the commodities market overnight. Manisha, even as the negotiations continue, crude prices fairly range bound, currently $79 per barrel.
Well, yes, at one point in time, we started Asia with nearly 81 plus kind of levels, but there have been statements since a joint statement really from Iran coming in about how there is a major progress to end the Lebanon war. That clearly has been a bit of a thorn in the flesh. And then, of course, there have been more positive statements about exports being waived off, blockade lifted, frozen assets released, and major reconstruction and development plan launched for Iran. So all of those factors clearly have brought the crude oil prices down yet again. Remember, from a conflict high of $120 a barrel, we are down to 80 at this point in time, and that's nearly 40% of a decline coming in for the crude oil prices. And while the crude prices have seen a decline, it has led to some gains come back in case of metal prices. So whether it's gold, 1% higher, silver, 1.5% on the higher side, and copper as well, trading a percentage point on the higher side. A bit of a strength coming back into the dollar index is something that's keeping the prices in check. But the scenario right now is decline in energy and gains in metals is how Asia is functioning.
Got it. Thanks a lot for that, Manisha. For the time being, we slip into a short break. You come back. We have Dharmesh Kant of Chola Securities who's waiting for us. We'll get straight to some fundamental stock talk. Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good start to the week. Well, let's welcome Hormuz into the show. He's here to tell us about some of those big movers in Friday's trading session. Hey, Hormuz. Good morning.
Good morning, Nigel. And Berger Paints was one of the big movers on Friday. It was the third best Nifty 500 performer that day. The stock was up around 9% and the biggest single day gain since March of 2020. And those 80 lakh shares that were traded on Berger Paints were the highest in a month. The sum total of the last 22 sessions put together as well. And the delivery percentage too was around about 19% and compared to the total number of shares traded. The 20-day average was just around 4 lakh shares, so 20 times its 20-day average for Berger Paints. 14 lakh, around 15 lakh shares marked for delivery, and the 20-day average being close to 2 lakh shares. As a result of that, the stock has turned positive on a year-to-date basis. Infosys was the big underperformer on Friday. Of course, the entire IT basket, most of them recovered from the day's low, but not Infosys. The second worst Nifty 500 performer that day. Close to 5 crore shares were traded on Infosys. The 1050 put option was the most active, where the premiums went up almost 4x that day. And the 20-day average is just 1.5 lakh, so 3x it's a 20-day average when it comes to the total traded volumes. And half of those shares were marked for delivery, so close to 2.5 lakh shares for delivery. The 20-day average is around about 82 lakh shares, so that too is around 3x for on the delivery front. And the stock in the month of June itself is down around 10%, and this is despite the fact that the stock was up almost 10% in the first 2 days of June. And lastly, Anandrati Wealth was one such performer on Friday. Did well. It's gained in 7 out of the last 8 trading sessions has the stock. Volumes around 9.5 lakh shares. The 20-day average was around 5.5 lakh. 54% of those shares were marked for delivery. So 5 lakh shares for delivery. The 20-day average was around 3 lakh shares. And in fact, the stock over the last 12 months has been a big wealth creator, up around 80%.
Right, we take that point, Hormaz. Thanks a lot for that. A bunch of stocks on our radar. They were buzzing around. Berger Paints definitely stands out with the kind of move that we saw on Friday itself. But the big news in the second half of Friday was the Jio IPO. From disrupting India's telecom market in 2016 to becoming a digital giant, now it's readying for its market debut. Rima joins in with the details. Rima.
Well, it's been nearly 10 years after Reliance Jio's commercial launch, and now it's finally headed to the public market. So just to recap its journey, Reliance Jio was commercially launched on 5th of September 2016. Free SIM cards, unlimited voice calls, free data under the introductory offer. And this launch transformed India's telecom landscape almost overnight. It triggered an unprecedented price war, accelerating the company's digital adoption. At Reliance Industries' latest AGM, Mukesh Ambani has now announced that Jio Platforms has filed the draft papers with SEBI for an IPO, and it marks a major milestone in the company's journey. And remember, Jio's entry reshaped the entire telecom industry. SL got bankrupted, Reliance Communications collapsed, Vodafone India merged with Idea Cellular. In 2020, Jio Platforms then raised more than $20 billion from 13 global giant investors. We're talking about Meta, Google, Silver Lake, KKR, General Atlantic, and many others. At that point, Jio Platforms was roughly valued between $58 to $65 billion. Today, investor expectations are for $110 to $120 billion in terms of valuation. Jio has gone from a disruptive telecom challenger in 2016 to India's largest digital platform with more than 500 million subscribers. And Jio's IPO marks the culmination of one of the most consequential business transformations in modern India. But now let's get to the details about the Jio IPO. Well, it's going to be a pure fresh issue. No offer for sale component. The existing shareholders, which includes Reliance and all the other investors like Meta, Google, they will not be selling any stake. The primary objective of the issue is to pare debt. The company said more than 27,000 crore will go in reducing the debt on the books. Now, ahead of the IPO, Jio's numbers are basically showing you a company which is entering into a cash generation phase. So these are the numbers for last year. The revenue has gone up to 1.46 lakh crore. That's a growth of about 15%. The profit is also up in excess of 30,000 crore rupees. Subscriber additions also rebounded very sharply last year. They went up by 36 million, and currently they stand at close to 525 million. The ARPU stands at 214. But I think the most important thing is the cash generation. Now, the metric we're looking at is the EBITDA less capex. Now, that number was about 1,450 crore in FY24. It shot up to nearly 20,000 crore in FY25 and now stands at 42,000 crore. It's basically a jump of 29x. What does that signal? That the company's heavy 5G network, the capex cycle perhaps is now behind it, and they've now entered a cash generation phase. Now, for most investors, really, there are limited telecom options, right? You've got a Bharti Airtel, you've got a Vodafone Idea, which is more of a call option on its survival and strength. Now, Bharti has been an investor favorite. It's a premium play. It's got higher ARPUs compared to Jio, higher margins, and plus you've got the Africa and Indus Towers optionality. Where does Jio score compared to Bharti Airtel? It scales on customer volumes. Jio subscribers are more than that of Bharti Airtel. And Jio is also more than a telecom play because it offers a play on India's digital economy. It's got mobile, home, broadband, enterprise, AI, all bundled into one. It is definitely one of the most awaited IPOs and the first IPO actually from the Reliance Group in nearly 20 years.
Thanks a lot, Rima, for that neat run through out there. Well, let's welcome Nitin Soni of Fitch Ratings, as well as Piyush Pandey, Senior Vice President at Trent India, who joins us on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, Piyush, coming across to you first. What are you factoring in terms of valuations on Jio? Remember, it's been long awaited, and the last 10 years have been absolutely spectacular for the company. Multiple you're giving it, what kind of valuation you're looking at?
So we are building in valuation of close to $130 billion, and that is 13 times EV/EBITDA FY27. But we do expect that the IPO will come at slightly discount, a 5 to 7% discount for this.
All right, the IPO will come at a 5 to 7-8% discount. They'll leave some money on the table. But, from a Reliance standpoint, what's the kind of valuation holding company discount that you're factoring in? Because that was one of the reasons why the stock perhaps saw a bit of a decline as soon as this announcement was made.
We do expect that the holding company discount would still be around, say, 20 to 25% post the listing of Reliance Jio. And that is what we expect post the listing.
All right, 20 to 25%. Nitin, your thoughts on this development and, how does it change the dynamics of the sector now? Because you'll have another listed player here and all of them will be looking for profitability.
Yeah, thanks for having me on the show. So we do rate Reliance Industries at BBB flat on foreign currency IDR, and local currency IDR is BBB plus. So it's a positive development from as a credit analyst point of view, given the fact that it's an offer for sale. The money will come in, and as the DRHP of Reliance Jio says, they will use the money to apply for debt repayment. So it will definitely strengthen the balance sheet. We know that industry is now essentially a duopoly, and both the players, Bharti and Jio, are monetizing their investments. Rima just pointed out that the free cash flow generations have increased significantly in FY26. So we do expect ARPU to improve 10 to 15% each year. And at the same time, data consumption per user per month will also increase from 42 GB at the moment for Jio.
Piyush, hi, gentlemen, both of you, good morning. Do you want to compare Bharti Airtel and Jio based on the numbers and from an investor point of view? What is the best strategy? Own both, or is there a preference for one over the other?
Better would be to own both these companies. Maybe in the ratio of like, say, 60 to 40. So one can have a weight of 60 to, say, Bharti Airtel and 40 to Reliance Jio. And in terms of numbers, I would say very similar, like, say, for example, both of them have revenues exceeding, say, 1.5 lakhs crores, plus EBITDA margin of 50% plus. But I would say for Reliance Jio, the key thing would be like, say, how they are ARPU growth in the coming years, like, because they have the industry-leading customer base. Now, I think how they're able to monetize the data usage, the customer base, that is something which will trigger for this Reliance Jio.
And you said that there is money left on the table. So assuming the valuation comes at 110, 117, these are some of the market reports which seem to be suggesting the potential valuation of Jio. You think that there is value which is left on the table, and this is a no-brainer investment for, retail investors should be subscribing in the IPO? Piyush?
Yeah, of course, there is value left on the table because we still have a story, I would say, investment story of increase in ARPU over the coming years. But apart from that, you have, like, say, Jio Savan, Jio TV, other, say, digital apps businesses, which are yet to, I would say, take off in a meaningful way. So I would say, plus telecom story remains primarily like a duopoly story where market seems to grow at, say, on an average of 14 to 15% of revenue basis. And in terms of, I would say, capex intensity has come down, and there is a scope to, and in fact, Bharti has launched premium 5G services. So I would say Jio remains an open area.
Okay, so your advice is own both Bharti and Reliance Jio in the ratio of 60 to 40. Nitin, what are the risks? At least one risk is out of the way, that there is no offer for sale. So selling shareholders, the existing shareholders, and they're quite sizable because the promoters own about, 65-60% stake. The balance is held by shareholders and they're staying put right now. And I presume there would be a lock-in for them also. At least for now, that risk is out of the way. What are the risks one should be aware of in this IPO?
Yeah, it's a good positive development that it's a fresh issue of shares. It's not an offer for sale. So which means that the investors, Google, Meta, and other investors, when they invested in 2020, see the growth in the company, right? They believe that the company has potential for growth in the medium to long term. As far as risks are concerned, from a credit point of view, we don't see any risk there, given the fact that it will strengthen the balance sheet. I think what is going to happen is that Jio will further invest in their network deployment on a 5G infrastructure. And we are looking at Jio digital platform compared to Bharti, which is a pure mobile and fixed broadband company. Obviously, when we look at Jio platform, it's more of a platform company where they have a wider range of products. They have a wider moat and wider investment in terms of investing into AI digital platforms, ownership of the content, ownership of the other AI related products. So we'll have to see in what products, in what networks they are going to invest further in the next 2 to 3 years, or maybe in the medium term. But I think that will add a lot of cash generation for Jio platforms as a whole.
What value would you ascribe to Jio's non-pure telecom business, the non-mobile business, or the non-broadband business, to the other businesses that you were talking about as a platform company? Is it 10%? Is it 20%? What's the ballpark number? Nitin?
Yeah, at the moment, I'm not a valuation guy, so I can't really give you any value number. But what I can tell you is that clearly the company is going into the right direction. As you know, regionally and globally, India is a laggard in terms of the AI deployment, right? In terms of the AI infrastructure, we are still at a much lower base in terms of the capital investment. With this IPO, the money coming into Jio platforms, I think it's a good development that the money will be deployed into further accelerating the AI. Our data consumption per user per month is one of the highest globally, which is 42 GB when last recorded. And I think what the two telecom companies should be looking at is to further invest in the AI products and AI deployment and platforms to increase, further accelerate the data consumption, which definitely is going to grow from here on. I'll not be surprised if in 3-4 years it will be 100 GB per month per user.
Piyush, one very quickly, because we're out of time. Can Reliance Jio at some point be looked as an AI play because of all the investments that they're looking at, and therefore the valuation could be different?
It can be like, say, for example, they have large customer base. And if they're able to launch some AI apps for, like, say, education, learning, agriculture, then maybe they would be able to monetize their customer base. And it can be seen like an AI company, but it depends on use cases. They're able to launch their AI apps, yeah.
Gentlemen, thank you very much for joining in. We'll keep coming back to you as the story unfolds. For now, the latest is that the DRHP has been signed and market is expecting a listing perhaps towards the end of this calendar year. Dharmesh Kant, Head of Research, Chola Securities, is now joining in. Dharmesh, both our previous speakers seem to suggest that Reliance Jio IPO for retail subscribers is a no-brainer. They've left value on the table, assuming the valuations that the market is talking about, 110, 120 billion dollars. What is your own assessment of the numbers that we've learned from the DRHP?
Yeah, good morning, Rima. Thanks for having me for the show. We were penciling $100 billion to $110 billion for the simple mobile business platform for Jio. So it's almost there. If you take it at the lower end of the valuation multiple, it's around 10% discount to Bharti. And upper end of the valuation multiple is around 10% premium to the Bharti Airtel. So that way, I think is fairly best. Let's see what's the IPO price they are working on and how it's being carried forward. So as far as mobile play is concerned, it's fairly valued. In AGM, the directions were pretty clear. So future directional move where the business is going to take, they have clarified very clearly. So that's a good point, and nothing more you can expect in an AGM regarding the details of the businesses. So what could be the next leg of the growth driver, and that is the three verticals, be it LEO satellites or the data center play or the AI. These are capex heavy, business models and low margin business. So right now it's 52% kind of an operating margin. Data center, typically, if it's an infra play or architectural stack kind of a play, it will boil down to 15 to 20% kind of a margin. AI, depending upon enterprise AI rollout is there, then it can be around 15 to 25% kind of a margin business. But if it's a consumer AI, so right now, most of the consumer AI plays is around negative operating profit to 10-15% kind of an operating margin. So that's a challenge out there. LEO satellites in its matured form they can give you around, say, 35 to 40% kind of a margin, depending upon the scale, size, and the type of satellites they launch into the orbit. So much details regarding what kind of a capex will go into it and what can be the blended margin will come into play. Having regard to the IPO, I think market will definitely give a premium to these businesses in future. In next 7 to 10 years time frame, I think more than 50% of the revenue and profitability will come from these new businesses, be it data center, AI, or the satellite play. And there, I think 30-35% kind of a premium will be given to that. So even on the higher side of the valuation multiple currently, so we are penciling it around 20 to 25% kind of a listing gain. So it's going to be a good listing as far as our understanding is concerned on the Jio platforms, in light of the future businesses which should turn profitable, given the management pedigree and the way they have, whatever they have said, they have actually delivered, though the time may vary, 1 to 2 years, but deliverance has been there.
Okay, all right. Hi, Dharmesh. Good morning. Good to see you in. Dharmesh, Voltas, they've gone ahead and hit 1 million, and faster than last year. I think last year it was in 88 days. This time it was in 81 days or so. And last full year, I think they did close to around 2.4 million units odd. So they're saying it's a good start to the year. Margins is going to be a question though, but top line growth should be there because price increases as well as volume growth will be there. However, because of the currency depreciation, input cost spike, we'll have to keep an eye out on margins. What's your view on the stock?
Yeah, good morning, Nigel. Definitely Q1, as far as margin is concerned, there would be some challenge out there, but it's a transitory phase because now the input prices have cooled off significantly, and after Q1, we would be walking into the festive season. So the way things are panning out, we have seen there's a huge tailwind in the economy. Even the direct tax and indirect tax numbers for the June was a robust 22% kind of a growth in the corporate tax and 8% kind of a growth in the individual NHUF, the non-corporate taxation side. So that does underpin the point that there's an underlying current in the economy. If monsoons are somewhat, near to their guidance of 90 or 92% of LPA, then I think this is a transitory phase. Q2 and Q3 should be good for all consumer durable companies because the last 2 years has been a washout. And keeping that in mind, there should be some pent-up consumer demand coming into play. Let's not forget the wage revision codes because a lot of cash-in-hand take-home money has increased in the hands of most of the people on account of future savings though, because the 1800 kind of PF reduction has given ample money on the take-home front. So I think all these factors should play. Our topic from the entire space has been LG Electronics for quite some time. And though we are bullish on the entire segment, but LG Electronics remains a topic out there.
All right, LG Electronics it is. We will obviously hear from the management shortly. That's LG Balakrishnan that the team is flashing. It's actually LG Electronics. So pull up that stock and closer to 1680 on that counter. Take a short break, come back. We continue our conversation with you, Dharmesh. Also, we'll connect with Mitesh Thakkar for some technical trades. Stay with us.
Welcome back. We've got about 10 minutes to go for the pre-opening rates to kick in. Dharmesh Kant of Chola Securities is now joining in. The GIFT Nifty is suggesting a positive implied open of 59 points, so 60 points up. So some recovery after Friday's fall. And the fact that crude is trading below $60 per barrel is also helping sentiment. Dharmesh, IT was the big casualty, the accident of last Friday. Did you all make any purchases or it's an avoid? I know you have some individual stocks like Orion Pro that you like, but broadly, what's the call now on IT? And two, is there a risk that the guidance given by Infosys, for example, there could be a downside bias to that? Or do you think the guidance shared adequately captures in the macro uncertainty?
Rima, to our mind, I think the guidance given by most of the IT companies adequately captures the FY27 kind of an outlook. I don't think there would be a downside risk to any of them being on the constant currency front. In fact, there can be some upsides of the budgetary surprises coming in, as most of them has tied up with some or the other AI service providers, and most of the products which are being now rolled out is AI enabled. So some business out there, but if the net sum of it remains to be more of a constant kind of a play rather than any growth coming in, there would be people who would be buying into the corrections because of the corrections have been pretty sharp. So for us, it remains a clear avoid. We don't think it can be a structural growth story in the making. What can be there on the table is some kind of a catch-up rally being happening to the valuation discount plays which has been there because of sharp corrections which is happening. So it's a trading play, nothing beyond that.
All right, nothing beyond a trading play. Dharmesh, we'll again take a short break. Come back on the other side. We'll have all right, okay. Just a word before taking a break on a couple of these paint companies. Berger Paints for one, a big mover on Friday's trading session. Crude prices are down. These companies have already taken price hikes. Competition is now moderating, at least the intensity, because now the price difference between the disruptors and the incumbents has come down. And given the monsoon has been delayed, it gives a longer window for people to, paint their houses. So typically that is positive for these companies. Would you concur with that? And given the recent underperformance, would you bet on any?
Yeah, but I mean, painting your houses is a different, it's a fuel consumption play, and it's a cyclical play. Around 2 or 3 years, you go for the replacement kind of a painting. And as far as new constructions are placed, it's a continuing business. Definitely, whenever you take a price hike, rollbacks are not there. So Q2 onwards, there would be some benefit of the margins coming into play, and Q3 would be the best for them because the inventory exhaustion would have taken place. So 45 days to 50 days kind of inventory built up most of these companies have. So that said, we are not very bullish on the paint segment, though there can be, last Friday there was a huge spike in the Bajan paints. But around 10 to 12% kind of growth on a blended basis on the revenue front, taking into account volume as well as the price hike is what we are expecting this season. And to that count, if you look at the valuation multiples, they are fairly high. They are not cheap any longer. Maybe 5-10% kind of a trading play can still be there. But as a structural theme, I think the incumbents as well as the new players are playing very hard. But that again, the competitiveness as to the pricing will return back. So to that count, we are not avoiding this segment as a structural play.
That point, Berger, a lot of people believe that is also a play on the revival of West Bengal after the election results in terms of GDP growth coming in out there as well. Take that point. Thank you. Always a pleasure speaking with you, Dharmesh. We'll leave it at that. Take a short break. Come back. We'll have the pre-opening rate. Also, Manoj Gori of Equirus Securities joins in. We focus on consumer durables.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC TV 18 Motilal Oswal studio. Well, it's that part of the show then where we get our technical experts to help you out with how do you trade this session. Mitesh Thakkar, President Retail Research at Bonanza Portfolio, joins us on the show. Hi, Mitesh. Good morning. It appears it's going to be a good start to Monday morning because the GIFT 50 is suggesting some bit of green. How would you trade the index, the Nifty as well as the Nifty Bank first up, and then we'll get to your stock calls?
Good morning, Neil. So, on Friday, I suggested that if we get a good dip, we'll buy into it. And the target area of buying was around 23,850, while the low was 23,901. But the bias remains on the upside. I think, if you look at the 10-day, 20-day, 30-day averages, they're all pointing upwards. The 10-day has crossed over the 20-day, the 20-day has crossed over the 30-day. So it's net, the overall bias remains on the upside. Now, one, if you don't have positions in Nifty, if you want to buy now, I think today's 50-60 point kind of a gap up would not be a bad idea to buy into. Keep a stop below 23,975, 970 on this spot. And good chance that we might test 24,150, 160, which was the level which we tested last week, and eventually head towards 24,350 or even higher level. So in the short term, in the immediate basis, the bias is definitely on the upside.
All right, so 24,350 thereabouts is what you're looking at on the Nifty. Would you have a call on the Nifty Bank? That's been the rank outperformer here, right? How long before we get to 60,000, and what's the probability here?
So the Nifty Bank as well, Mangalam, has been trending on the upside. It's been slightly outperforming the Nifty as well. But what remains a very significant hurdle on the historical charts is the level of 58,350, 400. I would expect, and while the bias is positive, that around these levels, some profit booking in the banking names, banking stocks, or the bank index itself would be done. The next leg of stronger approval will happen only once we start closing above 58,400. So whether it will happen in the first go or in the second attempt, that is something which I'm not clear about. But yes, I think that's the level which I'm watching. Around those, my idea would be to take good parts of profits off the table. And if we start closing above 58,400, 450, then a fresh long can be initiated.
All right, now we have pre-open rates coming in pretty much in line with what the GIFT Nifty was indicating, about 100 points on the Nifty as against the GIFT Nifty suggesting a 70-75 point uptick. While we'll wait for those to settle, one that really stands out is Reliance, up around 1.5% in pre-open. Mitesh, saw a bit of a decline after the AGM on Friday. But do you believe that this is a stock which is poised for some outperformance here, if at all? Do the charts suggest that?
See, Reliance, I have had a positive view. In fact, we had some longs on Friday, which got stopped out because the price after starting well around 1340 dipped below the immediate support levels of 1315, 1310. I mean, just close below that. But again, I think the setup is not a negative. It's just the price action which was slightly negative. In case we can bounce back and recapture 1330, 1335 levels again, I think Reliance should again do well and possibly head towards 1360. That's the minimum pivot. But I think more logically, 1395, 1400 is what I'm.
1360, next stop, 1395. Got that. But you've got some more stocks as well that you want to tell us about. Please go ahead, Mitesh.
On the stock side, Nigel, in fact, today I have all buy or long side recommendations. The first stock which I'm looking at, which could possibly move on the upside is APL Apollo. After a good correction, the stock is showing first signs of reversal. So buy here with a stop at 1844 for targets of 1920. Lupin is something which I've recommended in the last couple of days as well. Now it's a fresh buy. Keep a stop below 2320. Look for targets of 2415. Then a buy on Eicher Motors with a stop below 7560, and the short-term one-to-day kind of a call for a target of 7700, and also a buy on HDFC Life with a stop below 582.5 for targets of 16.
Right. A few months of trading history is what we have on LG. Mitesh, listed in October itself. From levels of a little over 1750 post-listing, the stock was an underperformer. Just the last few weeks, it's come back, and it's now closing in on, once again, its earlier high of near 1750 thereabouts. Do you think this time around it crosses past that and there is fair momentum here?
So A disclaimer, I actually hold this stock, I've just bought it last week itself when the short-term price chart suggested a breakout above 1570, 1580. And the idea is that this is a breakout which has triggered some kind of an up move. Closing above 1680, would be very positive. The indicator setup is quite rising and suggesting good momentum. So 1680 was the highest closing which the stock did, rather 1683. I think it was way back in November 25. Now, historically, it's the only pivot left on the upside. So 1680, 85 is the near-term target. But I think once the stock starts getting past that, I would not be surprised if the stock can continue to run to as high as levels of 1800, 1850 to begin with, and in a good case, even 2000.
Got it. Okay. All right, Madesh, thanks a lot for that. Just one more stock I want to talk about is Vedanta Aluminium. You should keep an eye out on the stock, not, at the start, but maybe towards the end of trade. It will be excluded from the Nifty Next 50. And, as per estimates, the outflows could be to the tune of around $140 million. So for the time being, it's a bit of an uptake, but towards the end of trade, there will be a big volume spike last 30 minutes because it will get excluded from the Nifty Next 50. $145 million of US dollars of outflow is what we're expecting. So keep an eye on that. But let's focus then on the consumer durable sector. Amber Enterprises, well, that one signed a manufacturing pact with Oppo India. The company aims to diversify revenue. They had a con call on Friday. Let's go across to Upasana to tell us about the takeaways. And Upasana, tell us about Voltas as well. They have crossed 1 million units of AC sales. Please go ahead.
Well, certainly. First up, let me start with Amber. The stock remains in focus on back of that important investor meet takeaways. And the key focus this time around was on the Oppo collaboration and even the strategic rationales shared by the management. The collaboration is expected to diversify Amber's revenue profile is what the management has indicated and even reduce the seasonal concentration in its RAC business. Given the asset-light nature of the arrangement, the capex requirement is below 50 crore is what the company has indicated. In terms of volumes and the timeline, the company has indicated that the trial production is expected to commence Q4 FY27 onwards, and with the commercial production will be starting nearly from Q1 FY28 onwards is what the management has indicated. In terms of volumes, they have guided for 80 million units in year one, and this can scale up to nearly about 13 to 15 million units by year two of operations is what the management has highlighted. Moving on to Voltas now, the company has crossed 1 million AC sales units in FY26 to 27. It reaches a milestone which is crossed just within the first 3 months of the financial year. Mind you, this is the fastest ever run to 1 million units by the company. Now, company has attributed several factors to this run-up. It says that the momentum of the consumer demand continues to remain strong. Company's focus on innovation and strategic initiatives has also led to this kind of scale-up. And going forward, it believes that the demand continues to remain encouraging and company looks to build on this momentum in the months coming by. So both these stocks on our radar today on the back of this.
All right, both those stocks on our radar. Voltas, 1 million units is what they've sold, and Amber on account of that Oppo deal that they've had. To discuss this further, we do have with us Manoj Gori, who's the Associate Director Equities, Equirus, joining in. He tracks the space fairly closely. Let's start with Amber. Did well in the previous trading session. The Oppo deal is what the street was gung-ho on. Not sure whether you track it, but do you have a view on either Amber or Dixon?
First of all, thank you for having me on the show. See, on Amber, if you look at over last 3 to 4 years after COVID, company has taken consistent efforts to diversify their business into non-AC portfolio. They used to be heavily dependent on the seasonal product category, and slowly and gradually, if you look at right from PCBs to Sidwell and now Oppo, the company has consistently been looking to diversify its product portfolio and lower their dependence onto room ACs. I think this is one step that they have taken it, and probably they will try to build it further from here on. And accordingly, if you look at now today, Amber no longer remains a AC play, and in fact, it remains more attractive at a subsidiary level, especially if you look at the other product categories.
Right,
So
but
it seems to be an exciting opportunity, an exciting runway for Amber Enterprises.
does Amber's win mean Dixon's loss, or both of them are okay?
I think at this juncture, I won't say it's a Dixon's loss, but yes, Amber definitely seems to be moving in the right direction.
All right. Hi, Manoj. Good to see you in. Good morning. What about Voltas? It's getting hot in here, but it's good for Voltas. Clocked 1 million units. And sooner than, I think, the previous year as well. I think this was, quicker than the previous year. What are you penciling in with regard to Voltas? And it's going to be a little bit of a tricky situation, right? Because top line growth is going to be there, price increases, volume growth as well, both of them thumbs up. However, input costs actually would also have spiked up. So what are you building in terms of expectations, maybe for the first quarter? Will margins expand because of operating leverage, or will there be some kind of pullback because of this input cost rupee depreciation as well?
Yeah. So if you look at 1 million units, roughly into 45 to 50 days into this, roughly around 75 to 80 days into the quarter, I think it's an amazing milestone that Voltas has achieved. And that shows their leadership position also. Now, when you look at from a volume point of view, we believe like they would have grown significantly stronger on YOY basis, given that the base is also favorable. Secondly, on the margins, on YOY basis and on sequentially, we do see that margins will be improving, mainly because of the price hikes that the companies have taken, and the entire RM impact plus INR depreciation won't be visible into Q1. So Q1 numbers, especially on the top line and on the margins, on YOY basis will look significantly better. And just to highlight, like last year in Q1, margins were significantly under pressure. So on a lower number, yes, it could have a materially YOY improvement. I think the RM impact would be more visible into 2Q. But if you look at, given that the war fears are also like we also see that it's being behind us now. So somewhere in next 3 to 4 months, we might see normalization in supply chain, which should be offering some comfort on margins during second half of FY27. So probably there might be some margin pressure for the industry in consumer durables during 2Q. And probably from 3Q onwards, we should see some improvement on sequentially.
Okay. So Manoj, Q1 growth, the top line should be very strong. There will not be too much of a raw material impact. In Q2, we will see the margin compression on account of the raw material price inflation. So in Q1, when the numbers start trickling in July onwards, do you expect EPS upgrades? And do you think this momentum that we're seeing in sales in Q1 can extend into Q2 and in a way offset the margin pressure? And therefore, Q2 could also turn out to be a strong quarter?
That's the interesting point. In fact, if you look at, because see in Q1, obviously, when you look at the base, for the full year, the base will continue to remain favorable. Now, this kind of number, what we are seeing today, this is a normal growth that Voltas and the industry is seeing. The El Nino effect, which everyone is expecting, even there have been weather forecast on this, that impact will be more visible into 2Q. Now, if that plays out, probably we will see significantly faster growth on YOY basis during 2Q and remainder of FY27. So probably what we understand is somewhere when we were talking about 20-25% kind of volume growth assumption for FY27, a couple of months back, this used to be like it seemed to be more optimist rather than realistic. And now today, if you look at those numbers are clearly visible into what Voltas has reported in their update.
We'll leave the conversation here. Manoj, we had more questions. I even wanted to get your thoughts in on Xiaomi's plans to enter the white goods space, the consumer durable space in India, and how that will impact the competitive landscape. But that's for another time. Thank you for joining in. Voltas clearly will be one of the stocks to watch today. Mitesh is now joining in for some 9-10 calls. Mitesh?
Yeah, I'll go to the buy on APL.
APL, Apollo Tubes. Any levels?
I think, I did mention that in the call. I think I'm looking at a short-term, this is a short-term price target. Would recommend a buy with a stop just below levels of 1844 and a first target of 1920.
Thank you very much for that. Sonal is now joining in to quickly put the spotlight on oil marketing companies. Crude prices are trending below $80 per barrel. Sonal?
Thank you for that. Well, a couple of brokerages which are positive on the oil marketing companies. Kotak, for instance, says the profitability has sharply improved post the March-May squeeze. Fuel price hikes raised break-even to around $102 to $105 per barrel. But now crude correction of around more than 30% restores strong margins. And they think some excise duty rollback is likely. But full reversal of 17.5 rupees per litre benefit appears unlikely. Now, the sustainable break-even level for these companies is anywhere between $85 to $90 per barrel. Pre-war, it was anywhere between $75 to $80 per barrel. Now they do not expect any FY27 losses versus what was expected earlier. And FY28, FY29 earnings are expected to be really strong at current crude oil prices. There's strong cash flows that can fund strong capex and also can create earnings buffer. That's why they've upgraded the stocks to upgrade BPCL, target price 320. For HPCL, it's 400. And for IOC, it's target price at 150, and all of them have been raised to reduce from sell earlier. JP Morgan is also very positive. They say now the petrol and diesel margins are above pre-war levels. LPG losses, yes, they continue to remain high, but they have come off from the highs. And Q1 is likely to be hit by inventory losses, but Q2 will see improvement from here on. Profit recovery is largely aided by excise duty cuts, and government may allow debt reduction before restoring excise duties. So FY28 margin, however, it looks very uncertain because volatility could continue. They prefer BPCL and IOC, and OMCs continue to remain a tactical play on how crude prices move. So that is something that they are slightly worried about.
Okay, thank you very much for that. Awaiting the market opening, it could be a positive start because US and Iran have approved of a roadmap aimed at reaching a final deal within the next 60 days. The opening bell has rung and the first tick on the Nifty is around the 24,100 mark. It's a positive start, a gain of 85 points. The Sensex surging nearly 300 points. In percentage terms, it's a start with a gain of about 0.3%. The mid-cap index is moving nicely. That's got a gain of about 0.5% with a positive advanced decline ratio. The heat map will also come up for you on your screen. We'll watch for the IT stocks after the bashing that they got on Friday post Accenture reducing the guidance. IT is seeing some rebound today, so you've got green on the screen. So the second and third top gainers on the Nifty are IT names like Infosys and Tech Mahindra. The advanced decline ratio is skewed in favor of the advancing side. On the way down, ONGC clearly is under pressure, and that's on account of the decline in crude prices. But what the market right now is reacting to is some progress being made by US and Iran in the talks in Switzerland. They've also announced the establishment of a high-level committee that will, provide some sort of an oversight on the mediation as well, and the fact that crude prices are below $80 per barrel.
Well, that's right, Rima. From the broader markets, though, there are plenty of stocks that are doing a thing of their own. Kirloskar Oil, that stock has burst up in today's trading session. I have a note coming in actually from JM Financial, and they have upgraded the stock to buy from add, and the target price had increased to around 2,430 rupees odd. The reason they say is that they believe that the valuation gap with Cummins should actually narrow. So that's why that stock is up, and volumes are rather high. Another one that's moving pretty well this morning is, I think, Igarashi Motor. That stock as well is up closer to 9%. On the flip side, a couple of stocks actually that are reacting negatively. Aavas Finances, pull up that stock. There was a resignation coming in there from the CFO and the CRO, I think so. And there is a Money Control article that suggests some queries being raised on the company. So that's why that stock, in fact, is lower. Vikram Solar, the quantum actually of, the proceedings that they're fighting out in the NCLT from one of their, vendors, it's small, but actually the stock has opened up 2.5%. Remember, in Friday's trading session, I think it corrected 5% from the top. We'll have to wait to see proceedings from here on, whether or not there is relief or the quantum is small. But that stock has opened up on the back foot as well. What else? New India Assurance stock continues to rocket up. For this month, it's up close to around 35%. So big move up there. Vedanta Iron and Steel, that one's moving from circuit to circuit, so that's up close to around 5%. Vedanta Oil and Gas, well, that one's up close to around 5% as well. The street is dipping into these stocks. And Vedanta, that's up close to around 2.5%. The stock to track from the Vedanta group in the final hour of trade is going to be Vedanta Aluminium, because they will be selling to the tune of close to around $140 million approximately. Vedanta Aluminium, that's the other stock that we're talking about, yes, because it will be excluded from the Nifty Next 50. Mangalam, what else?
Well, the space to be in this morning has to be consumer durables. Look at Voltas, 1 million units sold. That stock is up 4.5%. Taking it along higher is EPAC Durables as well. EPAC Durables is another stock which is up 8.5%. So Voltas has moved fast. EPAC Durables only moved faster. We have Powermech as well. There is an order win that is coming for that company, and that stock is higher at open as well by about 4.5-5%. But again, back to the consumer durable space. So Upasana did tell us about the management sounding fairly confident in Amber and their prospects with Oppo. That stock is up around 2.5%. And if Voltas is selling as many ACs, I'm sure Blue Star is not far behind, which is what the street is betting on, which is why that stock is higher by about 2% as well. And we are seeing some traction on a few of these makers of these products as well. So PG Electroplast is the other one which is opened higher. The only one which is not doing well from this space right now is LG Electronics. After a big outperformance that we've seen on this stock over the last couple of weeks, maybe some bit of profit booking is in order for that counter. So that stock opens about 1% lower, and now that dip has been bought into as well. So it's flattened out a little bit. Soam Distilleries, their request for the excise duty agreement coming in hasn't come by, so as a result of which that stock's opened lower by about 4%, but remember had seen a big cut on Friday already, so down about 15% for this month for that stock. RVNL as well higher on account of order win. And in the broader markets, the only stocks which are seeing some bit of profit booking right now are the ones that saw a big rally. So Berger Paints was one, down about 1.5%. Cummins is the other one, down about 2% after rallying 30% this year. And we have Varun Beverages as well. A big surge is what we've seen on the stock in recent times. That stock seeing some bit of profit booking. But good time to then, welcome our market master of the day. We do have Mihir Vora with us in the studio. Mihir, we're underperforming right now if you compare it to the globe. But if you look at some of the broader market themes, they're actually beginning to show some signs of life. And it's bringing some, at least the domestic investors, some optimism that maybe the worst is behind. Would you agree with that? And is this the time to buy?
Absolutely. Good morning. Thanks for having me. I think we are just seeing a continuation of the good results that we saw for the March quarters. The same thing happened in the March quarter results, while the headline numbers were okay, but the broad market results, especially in the mid caps and small caps, were really good, which meant that even in the March quarter, the demand was quite strong. And that seems to be carrying forward into the broader market even now as we speak. So surprisingly, in spite of the war, the domestic demand story seems to be panning out, and plus the segments where the government still has its focus on, and the globally linked sectors. By the way, we do have some bullishness because of the global situation in the data centers, in the AI plays, etc. So I think the markets are trying to find pockets of growth and rewarding those.
Sorry, Mihir, to talk about a stock, but I believe you own Kirloskar Oil Engines. Is that a part of your portfolio? I can see it as of May. It's a part of the small cap fund.
It is, yes.
Okay, because that's a stock which is actually doing phenomenally well today. It's up close to about 15%. So broadly, not asking for an investment recommendation, but what was the thesis behind this particular investment or the sector, this particular theme?
Sure. So, I mean, not to kind of, talk about the stock, but in general, if you see, we are quite positive on the capital goods and the infrastructure, industrial goods, so to say, space. And that's because of two or three sub-themes. One, of course, is the government's focus on Atmanirbharta, which includes, defense, which includes some of the other capital goods, some of the other infra plays. Then you have the data center and AI plays, where you require a lot of power backup generators,
And Kirloskar falls in the AI data center as a backup diesel generator.
And then of course you have the other plays in like the people producing the physical infrastructure, the transmission and distribution segments. So broadly, there is a lot of themes, both global and local, that we can play in the industrials space, and that's what we are playing for.
Hi Mihir, good to have you in the studio. Mihir, we've got a couple of IPOs that are lined up, and rather large ones. And the street has
our version of SpaceX.
Oh, the street would love that, I'll tell you what. But, some part of the street says there's going to be a big supply that's coming in. 25,000 crores, another one, 30,000 crores. Between them, it'll be close to around 55 to 60,000 crores. I'm talking about NSE and the Jio IPO. Some would say that now there's further supply that's coming in there. What is your view? Maybe the FIs don't like what they see right now, and they may be preferring something that's fresh on offer. So maybe they'll be more interested in those two. How would you see this play out?
No, we always keep debating this supply, demand. The point is supply will come only when there's demand, right? Whether it's from local or foreign. In fact, at the worst of the COVID crisis, you saw some big FI names and multinational names come into the country, not in the listed stocks, but in some of the stake sales, etc. that happened. So wherever there is value, FIs and domestic institutions are there, and domestic retail is also there. So I really ignore supply-demand equation when I really take a view on the market, because supply only comes when there's demand. And you can always pace it up. The last 6 months, there's nothing.
Yeah.
Now that the markets have recovered a bit, we are hopefully towards the end of the Iran war. Things are bubbling up again. So that's part of the market.
But what would your view be? Say on listed companies, we let you go. Now these unlisted ones, you can give us a view. Tell us what's your view on the Jio IPO? What's your view on NSE? There's going to be a lot of interest. So I ask you, at this point of time, there is a peer that is already listed as well, for both these two.
That's a good thing, actually, because we have reference points.
Yeah.
So as long as the IPOs are priced reasonably, we are interested, frankly speaking, and it's all about the valuation equation. So we don't really treat IPOs separately as far as approaching the stock evaluation is concerned. We would want the IPO stocks to be at least 10 to 20% cheaper than their fair value, because you need that listing upside. You have to leave something on the table. So as long as the companies are willing to do that, we are there.
The worry is that the ones where no one is subscribing, the valuations are very high, and ones where the valuations are fairly good, you're not getting enough supply from the IPO, because obviously, there are so many takers for that. There's massive oversubscription and all of that. But do you think whoever wants as much will get in these because the size is so big?
Again, if the valuations are so attractive, then you might see a lot of institutional buying, cornering the supply. That can also happen. So I think it's all a function of the pricing ultimately.
You joined us and you said that the renewables theme is something that you like as well. Do you continue to back it?
100%, absolutely. Because not only in India, but globally, renewables, especially solar, is one source which can be ramped up fast. It takes many years to set up a nuclear plant. It takes many years to set up a hydro plant. Even for the coal-based, thermal, gas-based plants, the ordering cycle, etc., is very long. The thing about renewables, especially solar, is that the ramp-up can be very fast. And, you have enough supply of panels, etc., in the global ecosystem.
So what part of the value chain offers most attractive opportunities right now?
So the way we are playing it is essentially through T&D. That is one, because renewables require disproportionate amount of T&D compared to conventional, because they are fluctuating. So you need the grid to be much more strengthened, so to say. So T&D is one area. The second area is some of the providers of solar. So we have a name which is basically providing, commercial the renewable supply to commercial entities, not to the state government bidding, etc. Yeah. So we feel that wherever there's pricing power and you are not competing on an annual basis, that's where you should be on the IPP side.
With the usual disclosures, what would the name be? Just for one to understand, what is it that the company does?
I mean, there are only 2 or 3 names, right, in the private sector, and only one listed one does, commercial, so to say. And they're basically, tying up with most of the multinationals, etc., who want to set up data centers in India. So that's that's one of the names which is again indirectly linked to data centers.
Okay, all right. Mir, the debatable one. Tech. What do you do out there? There's not going to be growth, but we know that. There's going to be a couple of shocks that come about from the globe. You're pretty much expecting that as well. After this sort of an underperformance, do you think these are well-run companies and you want to allocate money because now they're evolving, they're buying some strategic stakes in AI companies like what we saw with HCL Tech? Or do you say you're not interested at all? Why to go for this when there are plenty of other sectors? How are you all positioned on tech?
So we are growth investors.
So then you're not interested?
No. I tell you why. There's a framework that we use: leadership, intangibles, and megatrends. Right. So intangibles, software, IPR, intellectual property, etc., patents, etc. That's one. So our IT companies are not there. Megatrends is something we'll ignore that for the time being. But the thing is leadership. For us, the biggest thing is hunger for growth. Are these IT companies hungry for growth? I don't see that happening.
Okay. So then you wouldn't want to be part of it?
Absolutely. Business as usual, there's not going to be enough growth.
Sorry, just to get back to that point about the renewables and private CleanMax, is that the company?
Yes.
Okay, got that.
There's a quiz.
All right. When we've spoken in the past, you had a clear bias towards small caps and flexi cap. Now, you run both the funds. But you said that the market conditions are right for investments more in small cap versus flexi cap. Does that still hold right now?
Absolutely. I think we're just seeing the beginning of the revival of the corporate cycle, etc. in India. And small caps and mid caps are where you can do the maximum amount of stock picking. Ultimately, it's all about alpha generation, right?
Okay. So the buy still remains for small
absolutely.
caps.
And in fact, if you notice, our small cap fund and mid cap fund have done phenomenally well.
Any themes that you've stopped liking that you liked, say, at the start of the year, but now it's run its course?
The theme that I'm probably waited a bit too long, and we're still waiting, is financials. Right? We've been waiting for financials to start performing. There are some signs after the RBI's measures, etc., that hopefully they'll start, working, especially after the FCNR inflows come in, liquidity improves, cost of funding improves. Then we are hoping that NBFCs and banks start performing. So that's one sector we were overweight on. Now we are neutral, and putting the trigger, finger on the trigger to go overweight, but not yet.
And within financials, what will it be, private or the PSUs? Because some of these large, well-run banks, they have underperformed actually the PSU banks.
Yes.
And the valuation argument as well has narrowed between the two.
Yes.
So at this point of time, what would you be more bullish on between the two? Or would you be looking at the NBFCs? Because the cost of borrowing as well could remain subdued for longer than expected.
So NBFC is definitely a better play as of now.
Okay.
But the thing about PSU banks is that the weight in the index is still very low. So while we like PSU and private sector banks equally well, in terms of absolute weight, you still might see the private sector to be on the heavier side because of the sheer index weight.
And on the private sector banks, you like the big boy who's underperformed for very long, even after the corporate action. I mean, it's been dragging itself. HDFC Bank,
Again, we are growth biased, so we typically prefer the higher growth segments.
So since you're growth biased, I have to ask you about the new age companies. The one thing that they are not lacking is growth. One thing they're lacking is profitability, but it's falling into place. There is an IPO likely in the quick commerce place as well. You have Zepto. So what are your thoughts on the new age companies? Because growth is coming, but not necessarily at an attractive price and not cash flow accretive either.
Right. So think about new age companies is there are so many segments, right?
Yeah.
So the stock that you mentioned has existing competition.
Exactly.
So I'd say that that segment has matured quite a lot, and incrementally, hopefully, cash burn should decrease. That's what it's looking like. But are we as bullish as we were, say, 2 years ago? Probably not, because the competitive intensity is a little bit more than what it was 2 years ago. So I'd say we are neutral to a mildly positive on the segment. But there are so many other companies where we are really positive. So as a segment, new age, we are actually quite positive and overweight.
There are new age financials.
So you have the travel linked companies. You have kind of auction companies, online companies. Then you have the insurance selling companies. So those kind of themes we like.
And you have the ones with their spectacles as well.
yeah, absolutely. and online teaching.
Physics wala, Lenskart.
Exactly. So many segments there. We are quite over it on that segment.
I'm just curious. You said auction company. Auction company in new age?
I'd say what you can call it. Online listings. For second-hand stuff and all.
Got it.
Wow. Chatting with me here is like solving a riddle, Every question is a riddle for us to solve.
Regulation, compliance.
All right, take that point. Thank you so much. Always a pleasure speaking with you, Mihir. And, we always learn a lot more about the companies that we should be reading about. And the quiz that, next time I think what we'll do is we'll put all your points and put it out as a quiz for viewers to write to us, and then Kaun Banega Crorepati with me is what we'll do. Thank you so much. Always a pleasure.
Always a pleasure. Thanks.
All right, maybe you want to stay on for listening to this conversation right now. Let's focus on LG Electronics. That stock's been doing fairly well over the last few trading sessions. Brokerages are positive on the stock as well. CLSA, for one, believes that it will be a key beneficiary of India's durable consumption upcycle. We've heard from Voltas, they've crossed that million unit mark in sales as well. To discuss this and more, we do have with us Sanjay Jitkara, who's the Director, Co-Chief Sales and Sales Marketing Officer. Along with him, Atul Khanna as well, Chief Accounting Officer. Thanks a lot, gentlemen, for joining in. We've had multiple conversations during the IPO, post results. There's a bit of a lull as well in demand, but now things look like they're looking good on the top line. So, if you could give us a sense on two things. One, this extended summer, and as a result of which your sales growth that you've seen in the AC segment. And the second part, as we move along, the cost of raw materials have increased. So even though we'll see volume growth and perhaps revenue growth because of price increases, would that translate into profitability?
So I would like to start here. You rightly mentioned this year summer season is helping very well. Last year we saw a cool summer. And see, India has a very tropical temperature, long summers, and rising pollution. So AC has become a necessary household these days. And the penetration of air conditioner is just 11%. We are doing fairly well in air conditioners. In first quarter of calendar year, we crossed 1 million air conditioner sales. If we see the economy, geopolitical tensions have resolved. Raw material prices, crude oil prices, dollars are moving towards, there is a downward trend. Consumer confidence is back, the best part is, and sentiments are positive. These all things are helping us to grow our business. Regarding talking about profits, see, to meet the profits, we have done 2 rounds of price increases. The first price increase was mainly of the structural type, where to meet the star rating compliance requirement, we increased the price. And second price increase was due to this external volatilities. And based on our competitiveness, brand strength, and value for the customers, we are taking that decision. During this period, we focused on premium sales, optimized our cost, worked on our operational efficiency.
We know already that you crossed 1 million unit of sales in the previous quarter. What we want to understand is this summer. How many units have you sold? How many units do you intend to sell in the quarter that we're currently in? Because that, for your AC business, is the largest. And if you could quantify the price increase that you've seen versus same time last year as well.
Just what Sanjay ji explained about our business for air conditioners, it is going very well as the summer demand is picking well, and the consumer has accepted the new B-rated regulated price hikes also. And they understand particularly the compliance of B rating and more energy efficient product being available to them. Whereas effective April also, we have taken a price hike in a room air conditioner as well as other product segments. It was being done structurally to absorb I will say, the impact of, so you can say pass on the impact of FX demand as well as some commodity price hikes. So, and the business is going very well. We cannot call it as a number, but we have shown a very positive trend during this quarter end numbers.
Okay, all right. Hi, Atul as well as Sanjay. Thanks a lot for speaking to us here on CNBC TV 18. Always a pleasure to host you all. Well, a quick question with regard to the point you're making on price increases. How much of the cost increase has been passed on? Most of it, 85% or 100% of it? Could you give us so we get some clarity with regard to margins?
See, we always think about our consumer, and our all pricing increase decision are based on our brand value, our price competitiveness, and affordability of our product, and a profit consideration as well. We took around 10 to 12% price increase for air conditioners.
Okay.
Roughly, if you see this year, B guideline was to improve 11% of efficiency. So to meet that guidelines, there was increase of raw material, which we inputted in that, and there was some external volatility also. Our products are still very competitive, doing very well in the market. We still hold #1 market share in air conditioner, value market shares. So things are very positive. Regarding our numbers, we are mainly a calendar year first quarter company, where we do almost 60% of our sell-in. And balance part, we do 40% of the entire rest of the 3 quarters. So things are moving as per our plan. And once we'll close this quarter, we will definitely give you our numbers, what we achieved. But our current growth and profit is aligned with our governance, which we...
No, so since you spoke that the first quarter, you do about 60% of the sales, the remainder 9 months, you do about 40%. I'm just back calculating. First quarter, you've given us that number of 1 million. If you do about 40% more already, 1.7, 1.8 million is what you should end this year with? Or because of the extended summer, you can also touch the 2 million mark, Sanjay?
So we will definitely touch 2 million mark. The reason is, if you remember last year, there was a cool summer. So we started this year, January, with a high channel inventory. So the sell-in shifted towards the first quarter of financial year, from quarter 4 to quarter 1. So that our traditional 60-40 ratio has a little bit shifted towards the other part of the year. And definitely, we, being a sales leader, we would definitely like to touch or cross 2 million mark.
So you will be around.
Said here, adding to what Sanjay ji said here, that we are not a air conditioner company. We are having a very well diversified product portfolio. As Sanjay ji explained, that 60% of the AC sales we have done in numbers in quarter 1 of calendar year, whereas the other segment of refrigerator, TV, and washing machine, we have a good pie of business where AC contributes almost 20 to 23% in our business contribution. So this quarter, running quarter, we are also expanding TV segment as well as washing machine very well, which is also followed by our refrigerator business as well.
Just some more questions on the AC, and then we'll get to the other segments as well. So, Sanjay, would you be significantly above 2 million or hovering around 2 million for the full year? And could you give an indication of how much would come in, say, Q1, Q2? And what about the inventory levels? For LG, where does it stand at as we speak?
See, Atul has rightly mentioned, we are not only a AC company.
So we'll come to that on the other businesses.
So, the specific numbers I will not able to, or I should not talk about at this time. When the time comes, we'll give you appropriate time, we'll give you the specific numbers. Regarding inventories, the partners have reduced their inventories because the H2, the calendar year H2 is full of festivals. So they are very well prepared and aligned to take benefit of second half festivals. The inventories are very much rationalized now. Actually, this year, last year, September, if you remember, GST cut was announced, which is helping really very well to our industry, because despite of price increases, the impact on consumers was very little, because 10% GST cut was there.
Okay. All right. Gentlemen, since you all have mentioned numerous times during the conversation as well, you all are a diversified company. So, across product lines, could you help us out with your market share? And in which segment have you all gained market share? Have you all slipped a little bit in any segment? And where is that market share headed? Because, we have in the RAC business, you have Voltas that is saying they have done very, very well in quarter 1. And it could be an industry-based phenomena as well, because it's so hot and demand has moved up. So give us some color with regard to market share. Please go ahead.
So till now, the global market share research company has declared till April market share. And currently we hold highest market share in across all categories, including air conditioners in value terms. We are a market leader for TV, washing machine, microwave oven, and air conditioner as well. Our market share in side by side have crossed 40% now, and our market share in OLED TV have crossed 60% now, 60% plus. The 55-inch of TV segment is doing extremely well. In quarter 4, it contributed 47% of our business. It's now touching almost 50% of our business. So our premium market shares are continuously improving, and this is our core focus area.
Okay. All right. I'm going to ask a very simple question, sir. I think we should put the guidance plate for our viewers up on the screen with regard to what you had given us for this year. That's FY27. And you all had mentioned that you all are looking at mid-teen sales growth with early double-digit margin. The start of the year has been very, very good going by what you're saying. So either of you gentlemen, is there a possibility that you can outbeat this guidance? Would you like to revise it a little bit more from your, for the remainder of this year? You can break it to us first here on CNBC TV 18. Please go ahead.
So every organization, I'll say that the dream and vision is to beat their performance of past years as well as the guidance which they have given. But
and you look like you're going to be doing that this year?
We are following we are following this guidance note, mid-teen sales growth in FY27 and early double-digit EBITDA margin is a more rational guidance from us as of now.
Okay. Such a good start, sir. Don't you think you can outbeat that? Quarter one has been phenomenal. So do you think that there's a possibility that you could outbeat that guidance?
If the demand goes well with respect to the current which is going as now, definitely we would outbid this performance of guidance which we are given. But we need to consider it is too early. It's 2 months only have passed so far, 2.5 months. So there are other factors also going in maybe upcoming time. But yes, if this type of demand grows up, definitely we'll gain the market share as well as we'll beat our estimates as well.
Wonderful. You know, just a final word, Sanjay. When we spoke during the IPO, we had posed a question: 30,000 crores in revenue, 3,000 crores by profit by FY27. Obviously, because of external factors in the overall industry, it looks like it won't happen in FY27. But do you think this happens in FY28?
Definitely. See, I am a sales leader. Definitely will try to surpass this. And if you see, our quarter four was very well. We did 8.1% growth. We registered 11.7% EBITDA also. It shows our brand strength, our strong fundamental and consumer trust. If external factors also helped us this year, only 2 months have passed, Atul has rightly mentioned, we will definitely touch or try to cross this.
Mount 30,000. All right, take that point. Thank you so much.
One more point here.
Go ahead.
Adding one more point here is that FY28, because there are almost now 2 years, right, from now, right? When we talk about our horizon to expand our exports is also phenomenal. So we would be expanding our exports we are adding on more countries as well as we would be adding more revenues in exports, which will drive our margins better.
Beautiful. Give us that number. Where will exports be in FY28? Last year, what was it? And going ahead, I mean, FY28, what is the target?
So current contribution is almost 6% we are operating in. As FY26 was, I will say, kind of subdued year for industry as well as for us. So, but though we perform better than the industry during this period of FY26, so we are seeing that it would touch upon nearest to in FY27, touching upon nearest double-digit exports.
All right, double-digit exports in FY27, and by FY28, maybe low teens?
We cannot call it exact number because giving a number is very easy, but it has to work upon a lot of operational things. But we definitely, our endeavor is to surpass this double-digit.
Got that. Take that point. Thank you so much for joining in. And we go back to, once again, the question when we asked them about competition, what's your biggest competition? They said that our last year's numbers are our biggest competition. So we'll obviously, monitor growth in this year as well and move along too.
All right.
Very good. Thanks for tuning.
Okay, gentlemen, we'll leave the conversation here. Thank you very much for that. The Nifty for now is holding about 24,100. Reliance Industries is the big mover today, so that's got a gain of about 2.5% following the AGM and the Jio IPO. CLSA has pegged the target price at 1,800 and IT stocks are rebounding. So you've got a Tech Mahindra 1.5, Infosys, HCL Tech with a gain of 1%. And you go down the curve, you also have a TCS rising nearly 0.5%. But the top gainer today is Cipla. Get into a break. On the other side, the management of Fractal will join in to talk about the company's FY27 outlook. Stay tuned. Welcome back. You're watching Corporate Radar. Now let's talk about the IT space. Remember, IT plummeted on Friday after Accenture cut the guidance. What's the read-through? We have with us Srikanth Velamakani, co-founder, Group CEO at Fractal Analytics, joining in. Srikanth, great to have you this morning. You know, I'm going back to that town hall conversation that we had when you came down to our studio, and we'd asked you the prescription for Indian IT going ahead. And you said that companies need to take some short-term hits. They need to increase their R&D spend. It's okay if the margins reduce. They need to convince the street about it because that's what it takes for long-term sustenance. And, you know, I'm just tying in with what Vishal Sikka, the former Infosys CEO, recently said on Voices of the Valley to CNBC TV 18. He's actually arguing for IT and SaaS companies to consider going private because then they can take those bold, radical calls for innovation. I mean, you know, since the last 1-2 months since we spoke, things are again changing. They're changing rapidly. What is your view on the Indian IT from now on? And talk to us about how they need to reinvent themselves.
The first thing to realize is that the demand for software, for tech, is only increasing. Companies are becoming more and more tech-centric, tech-intensive. Therefore, overall, the world, people will spend more on tech than they have spent traditionally. So which means that the opportunity space is large. The only question is, how will the tech services industry capture it? And they can capture it if they can move from input-based models to output-based models, bring in more productized revenue, and increase the overall R&D investments into what they're building. I think they will be ready to capture that much expanded market in the next couple of years. I foresee that the best days of the tech industry are well ahead of us. It's just a short-term blip that companies have to find ways to encounter and grow from.
You know, tech spends undoubtedly are going up, but it's getting redirected towards the infrastructure side. The services spends seem to be compressing. How long do you think that will last? And do you think the only way for the Indian IT companies to survive is, to thrive, not survive, is to go beyond services? Or do you think the services spend itself will expand after this initial period of compression?
What you're seeing is that overall, the world economy is growing by 2.5% a year, whereas the tech spends are growing by about 13% a year. So there's a major gap between the growth rate of the world versus the growth rate of tech. That's an expanded opportunity. A lot of that, like you rightly said, is going towards infrastructure, is going towards tokens, and so on. But what you will see eventually is that every company in the world will need to transform itself through technology, through AI. And therefore, even the services opportunity will expand dramatically in the coming years. The way it will work is that, let's say you need 100 units of work to finish a task. Earlier, it was 100 units of people time. Now it's probably only going to be 20 or 10 units of people time. But then the total amount of work dramatically expands through what is called a Jevons paradox. So therefore, the services spend will also expand, but it will not be if you are trying to be undifferentiated, you'll be struggling. You have to be very differentiated. You have to bring in AI, and you will certainly build products and so on as well as a way to overall expand your revenues and expand your margins over the next few years.
And that point that Vishal Sikka made, that companies must consider or think about going private, because that gives you the freedom to innovate without getting tied up in these quality, quarter after quarter numbers and reporting. I mean, it's a radical thought, but do you think it's far-fetched, or do you think that's what's needed right now?
This is not the first time that would have happened. And any company that needs to, let's say, structurally reinvent itself, it makes sense for them to go private and, fix whatever has to be fixed and come back into being public. That works. My sense is that at this point in time, there is peak fear. There's peak fear about technology services stocks. You can see with what happened in Accenture over the weekend and so on. The key thing is right now is that the market will understand if you're going to say, hey, I'm going to let my margins suffer a little bit. Let me increase my R&D intensity. Let me come back in a different avatar. They don't have to necessarily go private in order to do that. The market will understand if they're making structural adjustments in order to be much more competitive in the next couple of years.
So R&D spends. Now, broadly, Indian IT as an industry may be spending 1.5% of their overall revenues. You are at 6.5%, and you've spoken publicly about going to 10%. And many of the global companies are, 10, 20, even 30% in some cases. At least to begin with, what should be the number that, by how much should the R&D spends go up by?
So firstly, let's look at product companies. They spend roughly 14% of revenue on R&D. Services companies are currently spending about 1% or less than 1% of revenue on R&D. Fractal sits in the middle at about 7% of revenues on R&D. I would expect that most of the services companies should go at least to 3% of revenue as R&D. That would give them a really good opportunity to build things that the world needs. AI is really changing the way world works, and it is giving an opportunity to reimagine every business process with AI. So what it does is that if you build those products, you can certainly be a part of that transformation, drive your licensing revenue, and move from input to output-based models. Right now, a lot of the industry is in a commoditized selling people's kind of stage. That is the part that gets compressed very badly, and therefore companies have to move away from selling people into time kind of a model into more output-based, outcome-based, license-driven models.
Should they also, so that's of course one part of the pivot, moving from labor arbitrage, input-based to outcome-based. But should they also consider building products?
Yes, why not? I think the entry barriers to building products has come down. You can use AI to write code, and you can write 10,000 lines of code. You can write really deep products. The world is full of opportunities, and anyone who has a focus area can go really deep and build a very high quality product today. And if startups can do it, so can big companies. What big companies have to do is to increase that R&D intensity, and second, increase the density of talent. By that, I mean increase the quality of talent rather than just quantity of talent.
So just getting back to the point about Accenture, they lowered the upper end of the guidance. Now, I think NASSCOM's guidance for growth for this year is 6.1%, similar to last year. Is that the number we're working with? And is there a risk to that?
I don't have the exact number with me right now. My sense is that the numbers will be low single digit for this year, but will start to expand about 18 months from now. My guess is that some of the structural challenges, and also caused by macroeconomic headwinds and the wars in the Middle East and so on, these will all continue to play for some time. But between 12 to 18 months from now, you will see that the compression would have played itself out to some extent. Companies would have emerged with newer capabilities. And given the macroeconomic improvements, companies will start to see growth. Therefore, I think it is about the sort of having patience for about 12 to 18 months from here.
Okay. So FY29 is when perhaps things start getting better. But for this year, we should prepare ourselves for a low single-digit kind of a revenue growth. How has Q1 shaped up for you, Srikanth, for Fractal Analytics? I mean, when we last spoke, I think it was April, on the numbers, on the quarterly numbers, you'd said FY27 should be better than FY26.
Overall, our expectations from FY27 is that it should be better than FY26 for sure. And we are so obviously in now beginning to enter the quiet period, so I'm not going to talk about our Q1 numbers. But overall, we continue to stay bullish about how Fractal is shaping up and how we are building products, how we're building Cogentic as our flagship product, how we are seeing the progress of Vaidya and our medical foundation model, and overall bullish about where the company is going from here.
Okay. And just one final word on Fractal Alpha. That is that big optionality that investors in Fractal Analytics have. I think currently it's about 90 crore in revenue. Losses are coming down. It was 14 crore. What could those numbers look like? 3 years, 5 years? And are there any new big AI-related bets that you're making, whether it's related to sovereign AI or sovereign LLM frameworks?
So Fractal is betting on a number of AI products. For example, our Cogentic platform is expanding nicely. We launched a Cogentic e-commerce product, which helps companies accelerate their e-commerce revenue just last week. We are increasing our investments into Vaidya, which is our medical foundation model. You'll see some interesting stuff happening there in the next few months. We are also increasing our Asper investments. So Asper is our revenue growth management platform. It's part of our Alpha portfolio. It's expanding very rapidly. Overall, what you're seeing is that the product investments and product revenues are expanding quite well relative to the overall business.
Srikanth, great conversation. Thank you very much for joining in. Look forward to chatting with you when the numbers come out. So many estimates are that Fractal will continue to grow at 17, 18, 19% at a time when the industry itself is struggling to grow in mid to high single digits. So Fractal has been outperforming, just going by what market estimates are, that about an 18% revenue CAGR is what the street has for this year and the next 2 years.
Got that, Rima. Well, the markets are holding in the green with a gain of around 120 points, but plenty of stocks in the broader markets are doing well, and that's why the number of stocks advancing, if you compare it to the number of stocks declining, that's in the ratio of around 3:1. And a couple of stocks that are on the radar, JDL Industries, one of those big underperformers. There was an offshore-based fund that bought a stake in the company at around 72 rupees in Friday's trading session. So volumes were massive on Friday. Today as well, that stock has perked up. It's up close to 3%. Massive volumes from that one. And the other one is, Stovecraft. That stock is, well, a big underperformer. Volumes have come back. We had done an interview on Chartbusters a couple of weeks or so ago. And the stock is moving up because they said that demand is good on ground. Remember, this is a stock that was, I think, at around 1,100 rupees, corrected to around 500 rupees. And from there, it's seeing a bit of a recovery. Let's see how Q1 shapes up, as well as the remainder of the year. But the management was rather optimistic when they joined us here on CNBC TV 18. Time to get a quick technical view, though. Nagraj Sethi joins us on the show. Hi, Nagraj. Good morning. Good to see you in. Hope you had a good weekend and a good start to the week. 120 points up on the Nifty. What would the trade be? And fill us in with your fresh trades as well.
Hi, good morning, Nigel. Yes, Nifty has bounced back very well from near the support of around 23,900 levels recently. And overall chart pattern is looking positive. I'm expecting Nifty to sail through the immediate hurdle of around 24,200 levels in the quick period of time. The next target would be around 24,500 to 600 levels in the near term. Second, I have two stocks from alongside. First one is Waaree Energy. Chartically, it has been showing a consolidation. Recently made an attempt of upside breakout, placed above the 200-day EMA and 10 and 20-day EMA. Overall chart pattern looking positive. Currently showing some consolidation. It's a buying opportunity at the consolidation. Currently trading around 3,108. One can look to buy at this point of time. 3,300 is going to be the immediate target, and one can place a stop loss at 3,000. Second one is from a railway side, IRFC. IRFC, after a big move, has been in a consolidation phase last few sessions. However, it has placed above the crucial hurdle of downtrend line, the chartically looking positive. Currently trading around 100.30. One can buy at this current market. Immediate target would be around 106, and one can place a stop loss at 97.
All right, we take that point. Nagaraj, just before we let you go, you have a view on the auto space. It's making a bit of a comeback right now. Bajaj Auto, for one, has moved to the high point of trade. We're also seeing some traction in Eicher Motors, which has suddenly spiked up. The auto index as a whole has moved to the high point. Do you have a view here?
Yeah, I have a positive view in auto sector. Auto prime stocks as well as the auto components, mid-cap auto stocks are likely to outperform. If you look at Eicher, what you just discussed, showing consolidation movement in the last few sessions and making an attempt to break above the hurdle, the chart pattern is looking positive. I'm bullish on auto sector as well as auto components, mid-cap space as well.
Okay, thank you very much for that. Get into a break. On the other side, Manisha Gupta will join in to talk commodities. Stay tuned. Welcome back. As promised, let's talk commodities. Manisha is now joining in to talk about the slide seen in crude prices.
Well, absolutely. If you look at the previous week, the crude oil prices have declined by 8%, and this is following the 6% decline that we saw in the week prior. And if you look at from the kind of highs that we saw during the West Asia conflict, the crude oil prices did go to $120 a barrel as well. And from those kind of levels, we are trading below 80. So that's almost a 40% of a decline that we're looking at in the Brent crude prices in the matter of last 2 months or less. Well, it is about the volatile P stocks that the market seem to be reacting with. In the Asian markets, we did see prices at $81 a barrel. There are concerns or uncertainties about reopening of Strait of Hormuz. As of now, we have a positive statement both from US and from Iran as well. And there are reports on how some 35 ships have crossed in the last 2 or 3 days via the Strait of Hormuz. There is a joint press note from Iran and US, and while it says that there's a tireless Pakistan and Qatar mediation that has delivered major progress to end the war, it also says that from what we are looking at right now, the oil and petroleum exports have been waived off, the blockade has been lifted, and the major development plan has been launched when it comes to Iran's development. So some positive coming in, and that is ease the kind of premium that we've seen in case of crude oil prices. There is support, though, that might just about continue from the fact that the Ukraine drone attack forces Russia into a fuel rationing. And second is there has been an operational incident that we know of at Qatar gas plant. But apart from that, it's almost everything that seems to be putting the prices on the lower side, especially the rise in supplies. The OPEC plus supplies will now start coming into the markets. Beyond Iran, it is Kuwait, which is going to hike crude output by 2 million barrels per day versus 0.5 million right now. Not just that, you also have Iraq, which is looking to restore output from the Western oil fields to the tune of 3 million barrels per day. So you have all of that crude coming back into the market. And then it is about the low demand estimates as well, which seem to be putting pressure. 50% of new car sales in China are EVs or plug-in hybrids. And then you have China pivoting away from heavy infrastructure where you require oil and petroleum to high-tech manufacturing where you require chips and rare mineral metals. So that is what we are looking at in sense of shift coming in there. And then apart from that, it also is about aviation efficiency, sustainable aviation fuel mandates coming in from various countries. And it is about the global bans on single-use plastics, reusables. All of that will in some sense gradually even will decrease the demand coming in for crude there. There have been various reports and suggestions on whether or not we're looking at oil demand peaking. Well, there is quite a divergent view on that as well. IEA believes that could happen in 2030. Goldman Sachs puts it to 2034. And you have OPEC suggesting that 2050 is what it'll take by the time you're looking at world oil demand peaking. And that is because while the West, the developed countries are not looking at such a strong demand in sense of oil, it really is coming in from the Southeast. Countries like India, Africa, Middle East, Southeast Asia is where the demand for crude just about continues. And that is what will perhaps lead to stronger demand forecast going forward as well.
Thank you very much. Thank you very much for that. A quick check on markets before we get into the break because things are picking up now. We're now at 24,150 on the Nifty, 130 points higher. On the gainer side, you've of course got Reliance and the IT names, but a couple of these auto names are perking up. So Tata Motors passenger vehicle has a gain of about 2.5%. It's crossed the 50-day moving average. Along with that, Bajaj Auto is inching up 2%. Again, crossing the 50-day moving average. Eicher Motors has been trending nicely. Large cap banks like ICICI Bank, HDFC Bank, also seeing some buying. But the space that's alive is the mid-cap space. Individual stocks, not the index. NOSIL, 20% up. EPAC Durable, also a play on the AC space because it provides the manufacturing and it does the manufacturing for many of these, RAC, room air conditioning companies. EPAC is seeing buying along with that. Voltas, NIIT Limited, 12% up, so that's circuit up. Lakshmi Organic, Clean Science, Aegis Logistics, the two Vedanta stocks, Vedanta Oil and Gas, Vedanta Iron and Steel, both nearly higher by close to about 5%. Along with that, Vedanta Power too is seeing a lot of interest. EIL is another big mover on pretty large volumes. On that note, we'll get into a break. It's our special Indianomics segment on the other side where Lata will connect with external members of the MPC on the minutes of the June 5th policy.
Welcome to Indianomics. The MPC minutes were made public on Friday, that is the Monetary Policy Committee minutes, and those minutes show that most members have preferred to pause on June 5th, given the very high uncertainty surrounding fuel and food inflation. During the June 3rd to June 5th meeting, when the meeting was happening, crude was $95. And even now, one isn't very sure of the opening of the Straits of Hormuz. Likewise, the exact impact of a deficient monsoon on food prices is unclear. RBI members also point out that the last available inflation number for April is below 4%. Also, members have argued that there is no demand pull inflation, no overheating of the economy, as Saugato Bhattacharya put it. A cost push inflation policy must wait to see whether it is getting transmitted into the second round of hikes. That's Indrail Bhattacharya's statement. So where does all this leave us from here on? Is an August rate hike even more unlikely since June 5th crude prices have actually fallen by about 20%? I'm joined by two of the external members of the MPC, Dr. Nagesh Kumar and Dr. Saugato Bhattacharya. Good morning, gentlemen. Okay, Mr. Nagesh Kumar will be joining us shortly. Saugato, good morning, and thank you very much for joining us. Well, first up, you have also argued that there is no overheating of the economy just yet. Now, what signs will you watch out for by the time we come to August or October to give you a feeling that policy needs to move? I think you're on mute.
Thank you very much for having me on the show. Always a privilege. So I'm going to question what are the things that we are looking for post the policy. I think we are already beginning to see some features of food of input cost inflation in the May CPI number, which happened, of course, with the statement in the policy. But even now, despite inflation coming close to 4%, CPI inflation coming close to 4%, and WPI inflation is 9%. Even now, I believe it is really not very evident that input costs actually are translated into retail inflation.
Ms. Saugato, just a minute. We seem to have a problem with the audio. It's not coming on very clearly. We'll try and redial and see whether we can set the audio right, and also wait for Mr. Nagesh Kumar to join in. Okay, well, I think we have Mr. Nagesh Kumar right now. Mr. Kumar, good morning, and thank you very much for joining us. The question that I was asking Saugato before you joined is, what exactly would you watch out for in terms of moving policy? Many of the members have argued that they will wait for second round transmission. You have not said anything. You have just said there is uncertainty. So what will you watch for in the August policy?
Well, I think what is very important for all of us to watch is the evolving growth and inflation dynamics. So if we see a major impact on inflation, or if we see a major impact on economic growth, then accordingly the action would be thought about.
Okay. Mr. Kumar, since the policy was announced on June 5th, that evening itself, we got growth numbers which were much stronger than expected. I mean, we had a 7.8% Q4. One full month was war impacted, and still the growth was very strong. Will not that give you the confidence to move ahead that, growth is very sound? It doesn't require help. Would that be an argument?
Well, it is certainly a very encouraging thing that we saw 7.7 point kind of growth in the outgoing year. But, the inflation side, the pass-through of the rising crude oil prices started happening only in May. And so one could not see the impact of that already in those numbers. So this will still be unfolding, and so one has to be waiting for the new data to come in, and especially after the partial pass-through, I would say, began to happen. And secondly, another good news, potentially, until it holds, this peace process, the deal was signed, but of course there are 2 months of negotiations, one has to watch out. But already in anticipation of this, and the blockade has been lifted, the oil prices have begun to come down, which is a good news for India.
Okay. No, I agree with that. Crude has come down by 20% since you all met on June 5th. But, the way in which the Reserve Bank has projected the inflation, the expectation is that very soon we will be at 5% and maybe closer to even 6% by the time we come to the third quarter. So would you wait to see a 5% before you move, Mr. Nagesh Kumar, or will you move in advance?
No, I think one has to see not only the numbers, but also inflationary expectations, how they are building up. And so, RBI conducts forward-looking surveys. So the one gets a hang of, or, some movement, which way it is going. And if the situation begins to go out of hand, there may be a case for, taking preemptive action. However, as I said earlier, the oil prices have begun to go down, which is the major factor in driving prices in India. So I do not, at this moment, I do not see a major cause of worry or alarm.
Okay. Well, even now, oil companies are making losses. The entire thing has not been transferred to the consumer. But let me get Saugato into the conversation. Saugato, let me start with the other point which only you make and which all of the market makes. But, we don't see it in the minutes. The global neutral rate appears to be rising. Clearly, Kevin Marsh's statement was not dovish, even if you don't argue it is hawkish. And the ECB has already raised rates. The global interest rate trajectory is going higher. Will we be caught behind the curve?
No, I'm not really sure whether we will be caught behind the curve, but I mean, the space for cutting in response to any potential slowdown that happens, that space is narrow. So of course, you have to look at macroeconomic stability issues. You have to look at the external balance, given the fact that we are operating in an open economy, macroeconomic environment. So you have to consider global interest rates. But the primary focus, I think, should remain the domestic, the growth inflation balance. And that's still a very evolving story. But I completely agree with you that rising global rates, rate cuts are almost out the window when global real neutral rates are rising. So that does constrain domestic monetary policy.
The same question that I asked Mr. Kumar, what will you watch out for in terms of, overheating or in terms of second round impact? Exactly, can you train our eyes to what you will watch out for?
It's very obvious, really. You need to look at what is called underlying inflation. So some say super core inflation. So if you take out the effects of precious metals, etc., oil, gas, food, so all of that. So the moment you begin to see, and actually you are beginning to see that in the May inflation numbers that I was beginning to talk about earlier, some read-through that is slowly coming in. So I think we will need to see another month worth of inflation data. So obviously it's both core goods and core services inflation, which will begin to signal whether inflation is getting embedded in the system. And of course, as Dr. Kumar says, the part of household and enterprise inflation expectations will also be a major factor in looking at how inflation is getting entrenched into the system.
As you point out,
in actuality and in terms of expectations.
Yeah, as you point out, and we are playing that statement of yours, already 1 year ahead inflation expectations have risen. Therefore, what would you wait for to vote for a hike?
So of course, there are, as you know, the Reserve Bank of India is working with a couple of committees to try to recalibrate the inflation expectation survey, both enterprise and household surveys. So that while that is in progress, but it is a little worrying that household expectations of current inflation are higher than the actual print of inflation. So that is something that needs to be watched. But even more than inflation expectations rising from the already elevated level, that's one trigger point in association with actual prints of inflation, core inflation, underlying inflation feeding into the system. And of course, together with this, as you rightly mentioned, that this is currently still largely a cost-push inflation. If demand parameters also begin to increase, so it's not just inflation, what you're seeing on the high-frequency indicators of growth, etc., that would also begin to signal that demand is rising, and that will probably the pricing power of companies to be able to pass through certain input costs, those will also be rising. So it's both inflation numbers as well as the actual demand parameters that are working.
Mr. Nagesh Kumar, when the MPC debates, how much accent do you all put on core and non-core inflation? Does core get a higher weightage in your conversations and in your thinking?
Definitely. I think, the point is, which, Saugata was making, we tend to look at whether the inflation is driven by supply side or the demand side. And if it is the supply side, then monetary policy obviously has a very limited role in adjusting or, managing that or addressing that. And the core is actually much more stable kind of, number or metric. And this is certainly which is, making or shaping our views about the inflationary expectations that are building up in the economy or not.
Okay. Well, Mr. Nagesh Kumar, we have to get into a break, but very quick monosyllabic answers from both of you before we take that break. When you meet in August, you will only have the June inflation number. Even the July inflation number will not be there. And chances are that will be a 4 decimal. It's not going to be 5. And you have a slightly lower crude price. So do you think it's premature to expect a rate hike in August?
Yes, I think it is premature, at this moment. And going forward, because the crude prices are, going down, not going up. And that would also help India to calibrate the, pass-through much more, correctly, or because right now we were waiting whether, this conflict will linger on.
Correct.
And if it lingers on,
so my question is more about August. So let me quickly ask Saugata. Saugata, in August, you will not still be at a 5 handle. We are more likely to be at a 4 handle. Will that move the Reserve Bank, the MPC? Because a 5 is on the, it's just the other month. Won't that move you all?
No, so I'm not speaking for the MPC. I'm talking about me.
Yes.
It's not premature. It depends on incoming data. Data needs to be monitored. The inflation balance that will have an impact.
Oh, that's most useful. I have a few more questions about real rate. The real rate, even if you get the average of 4.6 inflation, is a very, very limited real rate that the Indian savers are getting. Does that become a question for the MPC when they discuss that and other questions after the break? Bazaar viewers, you can listen to the entire conversation after market hours.
Reliance leads the market high. The stock is one of the top gainers on the Nifty as a whole host of brokerages issue bullish calls following the company's AGM on Friday, where it announced the Jio IPO and unveiled a growth roadmap for its retail, AI and new energy businesses.
Strong demand momentum sees Voltas hit 1 million AC sales in the first quarter of FY27 itself. The stock rallies but is off the highs. EPAC Durable, which is a contract manufacturer for Voltas, is up more than 10%.
Kirloskar Oil makes a foray into the data center business, wins an order to supply gensets to a 192 megawatt data center. Brokerages JM Financial and MOSL issue bullish notes. The stock up 20%.
The Finance Ministry grants Navratna status to Garden Reach Shipbuilders and Chennai Petro. Both stocks are up to around 3% in today's trading session.
And the government extends its anti-dumping duty on sulfonamide accelerators from the United States and China for 5 years. Nestle, India's largest manufacturer of these chemicals, up 18%.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and it's a good start to the week. The bulls will be feeling good. The Nifty up, the Nifty Bank as well higher in today's trading session, and the breadth of the market holding firmly in favor of the number of stocks advancing. Mangalam, it's looking green. Hopefully it stays that way.
Looking green, hopefully stays that way, continues to do well. The portfolio is looking a lot better, the broader markets. And as we speak, through the course of the day so far, newer stocks have been hitting the highs of the session. So, moments ago, we had some of the auto names do well. Look at pharmaceutical. That's coming back now. So Cipla has moved to the high point of trade. Gain up for over 4%. We've seen Sun Pharma as well. See a bit of a spike currently at the high point. So the auto sector has done well. Now it's time for some of these pharmaceutical names. So the pharmaceutical index itself comes up for you right now, currently at the high point. Good time to welcome Shivangi Sada for a quick technical check on the market. Shivangi, the last time you joined us, the Nifty was a good 300-400 points below where we were right now. You like the color of our ties, both Nigel and mine. And now you have a view on the index based on the color of our ties as well?
Absolutely. Very good morning, Mangalam and Nigel. Thank you for having me. So I've taken in a bit of that color on my shirt today. We've seen that, of course, the indices are quite positive, and follow-up buying and support-based buying has been quite strong at these levels. Of course, we're cheering above 24,000 levels, but the next marks that we're seeing is 24,500 on an immediate basis, and then 24,650 zones. There is some bit of call writers which have unwinded and which should lead to the next leg of rally for the short covering move. Now, support wise, we're looking at 23,950 as an important base here. Buy on decline to continue with a lot of sectors and stock specific action here in the market. Now, we've seen that overall Bank Nifty, of course, has been a major contributor in this entire rally, and this has kind of outperformed as well. We're having a buy on decline take on this index as well, although it is kind of consolidating from the last two sessions, but overall we are expecting the next levels of around about 58,500 in Bank Nifty with a support of 57,350 zones. So buy and decline and a lot of sector action to be capitalized here.
Okay, got it. Hi, Shivangi. Always good to see you in. Irrespective of the color of our ties. But tell us the individual stocks that you're looking at for today's trade.
Yes, Nigel. So stock-wise, the first stock on my radar is Bharti Airtel, which has kind of moved consistently in the entire June series, and we've seen that this is one stock which is quite resilient, which has been resilient in the entire market. On a weekly basis, it's comfortably making a base over here, and after the consolidation of the last almost 9 to 10 weeks, it is getting ready for a consolidation breakout here. So this one's looking quite positive, and we're looking at 2,000 as the next targets for Bharti Airtel with a support of 1880 zones. And the second one that I'm looking out is Titan, which is actually one of my favorite. And we've seen that, on the weekly basis as well, this stock is kind of moved after taking a support at an exact retracement level. So this one's quite positive with good amount of OI addition from the last 5 sessions, and we're looking at Titan for the next target of 4,600 levels with a support of 4,300 zones.
All right, when you said Titan is your favorite, is it the stock or are the products and the watches or Tanishq jewelry?
I'm biased towards both.
All right, take that point from Nigel Mee. Thank you so much, Shivangi, for joining in. With that, we'll move on. And in this market, get you some more ideas of profit coming in from our colleagues at Money Control Pro. Today, we have Kanchi Shah joining in with a stock.
Today's stock idea is Bharat Forge, which is increasingly becoming much more than just an auto component company, and that's what makes this story interesting. So the core automotive business continues to do well and should benefit as demand in export markets, especially in North America, improves. But the bigger story is the company's growing presence in areas like defense and aerospace, which are emerging as important growth drivers. So Bharat Forge has a defense order right now of nearly 11,000 crores, and recently it has secured a major carbine order from the Indian Army also. What's noteworthy is that about 40% of its defense revenue comes from exports, highlighting the company's increasing global presence in the segment. Also, aerospace is another area where the company is seeing strong momentum. Management is targeting a revenue of more than 1,000 crores from this business over the next 3 years compared to around 400 crores currently. The company is also looking to tap opportunities in the emerging market like semiconductor ecosystem. So while it has no plans to manufacture the chips, it just wants to become a part of the supply chain for equipments which are used by the leading semiconductor companies. Overall, Bharat Forge appears to be benefiting from multiple themes at the same time. Valuation-wise, it appears to be rich at 47 times FY28 earnings, so I would recommend to accumulate this stock in a staggered manner with a long-term view.
Thanks a lot, Kanchi, for joining and giving us that neat explanation on Bharat Forge. For the time being, though, we slip into a short break. On the other side, we'll continue to focus on markets. We'll also focus on some stock-specific action. Welcome back. Keep an eye out on the screen. A few of these stocks actually are bucking the trend. NHPC, I think we should get up for you on the screen. That spiked to the high point of the day. So good up move is what we're seeing. Urban Company, that's another stock actually that's spiked up. It's up close to around 5%. Volumes are very, very large on this one as well. And Equus, that's another stock that's up, I think, only around 3.5%. But it's seen a little bit of a perk up in the last few minutes. Volumes, again, rather high on this name as well. But let's focus on, on Reliance and the consumer part of their business. Remember, they've laid out a very, very ambitious plan for the next few years. Mangalam joins us to put all of that into perspective. Mangalam?
Well, dare to dream and care to execute. That's exactly what Reliance has been doing in their consumer businesses over the last few years, be it Reliance Retail or now increasingly the Reliance FMCG business itself. So Reliance Consumer Products, which was demerged last year, the gross revenue of this business in FY26, as per the annual general meeting, was 22,000 crores, and that's doubled since last year. So 11,450 crores in FY25 has turned into nearly 22,000 crores. And that's the fastest growing company that we've seen in the consumer space for the longest time. And in fact, in such a short span of time, for any company to reach over 20,000 crores in revenue is a matter of history itself. And what is it that's done well for them? Campa, which is nearly 5,000 crores of revenue, and some of the key markets they've got into double-digit market share as well. Independence, which is their FMCG brand, which has done extremely well as well, closing in on 2,600 crores. And add to that, they are pushing on manufacturing to drive the next leg of growth. And it's not just sales, it's the absolute reach. The products have reached nearly 3 million plus outlets and 5,000 plus distributors. So all these factors aiding Reliance FMCG business. But the question is, how does it stack up against some of the other players? Well, I was looking at Reliance's numbers. 22,000 crore in FY26 revenue within 3 years of its existence actually pits it closer to Nestle, which is here for over 60 years and now 23,000 crores in revenue. Look at something like a Tata Consumer, Britannia, both of them at around 20,000 crores itself. So Reliance FMCG is actually as much as Nestle and bigger than Tata Consumer and Nestle. If you look at some of the other players as well, there's Marico, there's Dabur, all of them doing 14,000 crores in revenue. Godrej Consumer itself, over a 100-year-old company, doing 15,000 crores of revenue, and Reliance in just 3 years has disrupted all of that. But they're not done yet. We have a very near-term vision and the long-term vision from the company as well. The near-term, they aim to reach 1 lakh crore in revenue by FY30, and long-term ambition is to be one of India's largest FMCG companies. As Mukesh Ambani said, that the consumer business will be their next multi-million-dollar opportunity. So while all conversations in the annual general meeting were around AI, new energy, and the Jio IPO, this one suddenly slipped through the radar, but could be the next multi-billion-dollar opportunity.
All right, Mangalam, thanks a lot for that interesting piece out there. We'll have to see how that goes. But I think we can hop across to Vinny. She's joining in to tell us about Kirloskar Oil. Remember, the company has made a foray into the data center business and the stock is locked up 20% or thereabouts. Vinny, take it away.
Hi, absolutely. Rightly mentioned, right? This foray is an interesting one, right? They've secured this 192 megawatt hyperscaler data center genset supply, and this is an order that's coming from Hypernext. Now, when you talk about it, what is it? 192 megawatt I mentioned, but this is 96 units of 2,500 kilo voltage. That's the measurement, right, that you have of gensets. So normally for data centers you require these high kilo voltages, and that is why it's a positive one, because Kirloskar Oil normally you assumed it to have those low horsepower, medium horsepower range of gensets. Now this is a high horsepower genset, and that is a positive sign. Now this OptiPrime dual core power system is what they'll be applying here as well. On the back of this, you have JM Financials that has upgraded the stock to a buy from a previous ad. Target price at 2,430 rupees. Previous target price was 1,955 rupees. They also highlight that this order is a major breakthrough for them in the data center space, where there's still minimal presence that they had. Significant inroad that the company has made, especially in the colocation as well as hyperscaler data center space. And they believe that, this 2,500 kilowatt of what they've achieved, they've already had offerings of 2,750 kVA as well as 3,300 kVA as well overall. So that is also something that is available with them. And because of this, obviously this becomes a big opportunity for them. So that's why they've retained the FY27 EPS, but increased the FY28 EPS by 8%, given the higher growth that they're expecting in high horsepower business for the company. So in terms of value, they're giving it 42 times FY28 EPS as well. Previously, it was 35 times approximately. Motilal Oswal also similarly is maintaining a buy, revised the target price to 2,350 rupees from previous target price of 1,900 rupees. So positive news flow coming in here for Kirloskar Oil, and that's why the stock is locked in upper circuit.
Take that point, Vinny. Thanks a lot for that. Take a short break, come back. On the other side, we have V-Mart Retail. Lalit Agarwal, who's the founder and MD, joins in. Welcome back. The market's doing well. The signs of rains in Mumbai, but not so much in other parts of the country. Let's see what the consumer sentiment is like. And to decode that, we do have with us Lalit Agarwal, founder and MD of V-Mart Retail. We'll focus obviously on the consumer sentiment. That's the most important part, Lalit. Thank you so much for joining in. Always a pleasure speaking with you. And if you could talk us through business in the first quarter so far, right? I mean, there was inflation, there was this uncertainty, people trying to reserve their resources and savings, and at the same time, it's not yet rainy, and monsoons haven't kicked in. How has that impacted your consumer sentiment, especially given your presence in tier 2, tier 3, and beyond?
Morning, Malam. Definitely, things have not been very, very easy and good for the consumers. It looks a little stressful. There is an inflationary pressure which is building on. Definitely, things could become a little difficult if the rains continue the way it is happening right now. There is some amount of fear in the rural consumer about the rain. But largely, what we have seen in our markets, the consumption is still on. We are able to see some consumption coming in. There has been definitely little consumption which is there. There is some impact which is there. But there are some internal pieces that we have done internally in the organization, wherein we are able to see some consumption growth which is coming in. So things are stressful, things are under a little bit of threat, but still, I would say it is ticking on, it is going on. It is not meeting our expectation that we had. Things could have become worse if this stalemate over Iran and US continued. But I think if things goes a little more neutral on these lines, if our fuel prices and the crude prices goes down, there should be an inflationary challenge which should get reduced, and that can really help our consumers during festival days. That is what we are expecting now, that our festival days should be protected. And if the rains are even around 90 to 93%, that could also be not so challenging, is what we feel.
So fourth quarter, you did about 1,000 crores on the top line. First quarter, what's the kind of growth that you're seeing despite this consumer sentiment being off, and you having done some, internal changes to the business to boost it? What can we expect? Is there going to be moderation, or is there going to be growth year on year?
See, they will be. We are definitely working on a little higher growth number, but we will have some neutral single digit, mid-single digit to a little higher mid-single digit number of growth that we will be expecting from the similar stores and same stores that we believe we should be able to deliver. We are also very gung-ho on some new store openings, which we have continued in the last quarter as well. So we have had a good base of last quarter new store opening that we have done, which has not performed the entire 12 months. So we'll get some growth out of that also. So we are anticipating a good double-digit growth overall.
Okay, so double-digit growth led by mid to high single-digit SSSG, right?
Yeah.
That's for the first quarter.
Yeah.
All right. Hi, Mr. Agarwal. Good to see you in, sir. What about some of the state elections that have got out of the way? The West Bengal election, there's been a change there in terms of regime. What is your exposure to a state like West Bengal, and how do you see things pan out in terms of sentiment, in terms of demand on ground?
So I think, Nigel, there is definitely a lot of enthusiasm in the consumers or the citizens of West Bengal, Assam, which continues. But we are seeing a lot of enthusiasm in the consumer base. They are expecting a lot of growth in their state. They're expecting a lot of formalization of economy to happen. They're expecting better law and order situation, better infrastructure, better business conditions, and better employment generation. So I think that is building a lot of hope and a lot of confidence. So we have a good exposure in West Bengal. We are definitely trying to grow in the entire eastern market. So we believe the consumption for the next 5 years in West Bengal is definitely bound to come in. There will be some movement from informalization of economy to formalization of economy, because what we saw in Uttar Pradesh last two decades or 5 years back, we may see similar kind of impact here as well in West Bengal. Some change of hands of money also happens during these periods. But I think it will happen a lot for a better state and better economy, and which is going to become very, very healthy in the longer term process.
Okay, all right. Mr. Agarwal, you're sounding quite optimistic, but you missed out in terms of your exposure to West Bengal. If you could quantify that. And also, you have given us guidance for the first quarter. For the year, what should the SSG target look like and revenue growth for the year, FY27?
So, Nigel, we expect similar kind of revenue from same-store sales growth, 5 to 7%, mid to single high digit same-store sales growth revenue to continue as we have done in the last year also. It could vary according to quarters because the festival keeps shifting. So you may see a little weaker second quarter, but you will see a very stronger third quarter because Diwali and Dussehra this time falls completely into third quarter. So, but overall, we should have a good growth. Because we are also planning to open good number of stores. We opened almost 90 new stores last year. The net became almost 80 stores. But this year we are targeting around 100 stores. So we should be able to build a good number from both like-for-like as well as the new store openings, which should give us a growth somewhere around 18 to 20% overall for the year. That is what our base assumptions are. If things don't go very bad because of monsoon or things don't go very bad because of inflationary pressure, we should be able to do that. And other than that, I think West Bengal, we have an exposure. We are almost have 36 stores in West Bengal. So we would want to grow that because the market is very large. We would want to grow more in that market.
All right, you have 36 stores in Bengal and you want to grow that market as well. For the full year, you're targeting 18 to 20% revenue growth, led by 5 to 7%. SSSG, 100 stores being added in this year itself. I wanted to also know in terms of the cost of operations, because of increased fuel prices, increased procurement prices, likely to increase labor prices, would that have an impact on your margins? How do you see that panning out over the next year?
See, there is definitely a lot of pressure that we are facing because of the raw material prices increase, because almost 70-75% of the raw material consumed is largely connected with crude oil. And there is a crude inflationary pressure and the scarcity, which is leading to even more pressure. But still, I think we have learned our hard ways in 2020-23 when we had seen some similar kind of pressure and we increased our prices. So we do not want to repeat our same mistakes. So we are not trying to take up a very high price rise for our consumers. We are trying to create a lot of alternate product lines, a lot of innovations to drive similar kind of look and feel with a little lower price product, and trying to do a little bit of more efficiency generation in the production and manufacturing processes so that we are able to generate a similar margin with not keeping the cost line high. So we are working hard right now. There may be a little bit of blip of maybe around 0.5% in the gross margin side, but we still expect to have a better full price sell-through so that we continue with a better overall margin. And that is what our expectations are, and that is what we are trying to do. We're not trying to dampen our margin any so.
So 13.5% or 12.5% to 13%?
I can't spell you those numbers. My CFO will be able to do it that better. But similar margins is what we are expecting.
All right, just a final question. Since you're opening 100 stores, since you're looking to add stores and cost of inputs have also increased, would that have an impact on your working capital days? If yes, how much higher could they go from current levels? What's the kind of working capital investment that you're looking at this year?
So, Mangalam, we definitely have created a lot of efficiency. We are using a lot of technology. We are actually getting into better technological algorithms and better ways of working. So we are trying to really work hard on reducing our inventory, bringing higher freshness in our stores, bettering our days of cover. So some money also getting released. You must have seen that in the last quarter result also that we gave. We actually are better on inventory days. So we will want to continue that spree more, and we will want to reduce our working capital days as well. But overall, definitely as you are growing up with the store, the overall working capital number may look a little higher, but that is in ratio with the turnover. But overall, the days of inventory should go down, and we should have better cash flow, we believe, because that is what we did in the last year also. We had a positive cash flow. We should continue doing positive cash flow even this year.
Always a pleasure speaking to you, Mr. Agarwal. Thanks a lot for joining us here on CNBC TV 18. Wishing you all the best for the remainder of this quarter as well as the year. We'll hold you to that guidance and chat up rather soon. Well, from the market perspective, we're at the high point of the day. So Mangalam and myself, for the last 3 hours that we have been on air, well, we have made sure that the markets have stayed at the high point of the day. Over to the team of Trading Hour. They'll take all the action forward. Stay with us.
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Horvas Fatakia. Joining me as always, Ritu Singh. And it's a good start for the markets today in what is a truncated week. We have the weekly expiry of the Nifty contracts tomorrow and the monthly expiry of the Sensex contracts on Thursday. So it's an action-packed week that is lined up in store. And after the Nifty managed to hold on to that 24,000 mark on Friday, courtesy of the FTSE and the Sensex rebalancing flows, the index has carried on from where it left off from the lows on Friday. Another 150 points added in today's trading session. So we are above the mark of 24,150. It's a good start to the trading day. And the one that's leading the charge today has been Reliance Industries. And the bulls would be happy for that as the big contributor to the index upside, even though most of the others are taking a bit of a breather today. 2.5% higher on Reliance Industries. Absolutely no reason for the bulls to complain this morning, Ritu.
Absolutely no reason to complain. Even if you look at the breadth of the market, that shows you almost 3 stocks advancing on the National Stock Exchange for every 1 stock that is declining. So about 2,214 stocks are in the green as we speak. The bank Nifty, the mid cap, the broader market small cap, all of that is holding up well. The big boy Reliance adding to the gains seen on the frontline index, holding up above that 24,160 odd levels as we speak. Sectorally, what is pulling the market up is also the IT pack doing pretty well in trade today. You have names like Infosys that are doing relatively better. Tech Mahindra Coforge also gaining in trade. Media, auto names, financial services, real estate, all of them in the green. What is seeing a bit of a weakness or flattish trade today is the FMCG pack and some of the mid-select names like Dixon, Indicen, etc. They're also a tad weaker. But apart from that, it's looking pretty good on the screen. Market breadth is positive. India WIX remains around the 13 mark. So that's a decent setup to start this new truncated week. But as always, let's put the spotlight on the top movers in the market. And Hormaz has walked over to the wall to give us that list.
It's a good start, as we were also mentioning, right? The dip has been bought into this morning, and the leg up that the market has received over the last few minutes, the bulls would take that as well. But of course, the important level to watch on the upside for the Nifty comes up to be the 100 DMA, around about the 24,200, 250 zones. That's going to be the first important level to watch on the upside. That is where the index had reversed as well from on Friday. The Nifty Bank had a bit of an intraday dip earlier in the day. That dip has been bought into, and now the index has started to move higher again, nearing the highs of the day. So nearing the higher end of that 57,000 to 58,000 range. Sustaining above 58,000 would be further positive for the Nifty Bank. Of course, it took a bit of a breather on Friday after that 3,000 point rally that it has seen from the recent lows. Leading the way, of course, as we mentioned, Reliance Industries, the top contributor to the Nifty gains in today's session, had a bit of a choppy move on Friday, but seeing a very good rebound today after the fact that brokerages are also positive on the stock. But one group that's doing well today is the entire Kirloskar group companies, and that's because of one stock, that is Kirloskar Oil. This foray into the data centers business, the upgrade that it has received, a 20% circuit for the stock, another 20% circuit for Kirloskar Industries as well, 9% move on Kirloskar Pneumatic, Kirloskar Brothers also up 10%. So a big move on all of these Kirloskar group companies. You take a look at the newsmakers as well. Nosil is one name who surged around about 20%. That's of course after the anti-dumping duty news. That's a positive for the stock. Cipla, where Citi has opened a positive catalyst watch for a 90-day period. So positive brokerage recommendation. Blue Cloud Softtech, it's a 1,300 crore market cap company. That is, the company has informed that it is exploring some opportunities with SpaceX. That stock is up 17%. And Aavas Financiers at one point was down around 3.5–4% after the management clarification has recovered some of those losses. New India Assurance is up for the 7th day running today. 4.5% added after its name appeared on the NSE list of selling shareholders. It's a one-way move for the stock. EPAC Durables after the move on Voltas. After Voltas and Blue Star are off the highs, but EPAC Durables is at the day's high now, 13.5% higher on the stock. And Aegis Logistics too doing well for itself in today's session. A lot of these communication companies are at 52-week highs today. Tata Com is up 5.5%. That's at a 52-week high. HFCL continues to move higher after a bit of a profit booking circuit seen over the last couple of weeks. So 2.5% higher in today's session. And Finolex Cables too having a good day at the office. 3% higher on that one as well.
All right, lots of individual names there to focus on, but the big one that we've been talking about here, the big boy Reliance Industries, brokerages there are coming away increasingly bullish after the annual general meeting last Friday, highlighting AI, new energy, FMCG and exports as the company's next growth engines. Sonal Bhutra joins us now to tell us what the street is betting on. Sonal.
Well, a couple of big announcements that the company made this AGM, right? And the stock had been underperforming, so there's a big surge that we are seeing today. CLSA has an outperformed rating on the stock with a target price of 1,800 rupees a share. They say that the company spoke about using AI as a core tool for businesses across the board, and company will be commissioning its first compute capacity by the end of 2026, and that is something that they are quite bullish on. AGM showcased a variety of Reliance's AI solutions for customers across its business is a foray into the underground coal gasification, where the government has been also talking about a big outlay, along with multi-sector exports were revealed as new areas of growth. A target to double EBITDA in the next 5 years was announced, of course, and the target price currently is not assigning any value to the AI business, new energy business, export plans. So, of course, there could be an uptick and upside from these levels as well. Nomura also has a buy with a target price of 1640. Jio listing by end of 2026 is possible. The valuation band is anywhere between 117 to 127 billion dollars as per media reports. AI, according to them, is the new growth engine for the company. Intelligence moves from plan to execution. The Jamnagar becomes sovereign AI hub. They are targeting 120 megawatt by end of FY26. New energy turns on. That's the word that they've used, because after announcing that big capex back in 2021, now it is coming on stream, be it solar, be it cell manufacturing. And also the fact that new energy will report revenues for the first time from FY27 is something that will, of course, bring an upside to financials as well. $3 billion green energy supply agreement with Samsung C&T also supports the ambitious green molecule story that Reliance has. Jefferies also has a buy with a target price of 1675. They are liking the reiteration of some of the objectives that they had outlined in 2025 AGM. Recovery in retail growth could re-rate the stock from the one standard deviation level it is trading at currently, so they are positive on this particular name. Motilal Oswal also has a buy with a target price of 1655. They talk about the 5 major value creation pathways for Reliance Industries. They have reiterated oil to chemicals business to create secular growth revenue streams. New energy is going to be the big trigger, which is also not a part of the SATP. Reliance Intelligence will be the most prolific growth platform according to them, and Reliance Retail, that could become India's largest FMCG companies. 125 to 150 billion dollars exports for the by the company by 2032. These are some of the big pointers that they highlighted. Most of the brokerage is quite positive on the stock.
33 out of 34 buy recommendation. Sonal, thank you for that update there on Reliance Industries. But staying on that, from disrupting India's telecom market in 2016 to becoming a digital giant, Jio is now readying for its stock market debut. Jio Platforms filed for what is likely to be its for the largest ever IPO of around $4 billion. Reema is here to tell us how this listing is set to be a defining moment for India's public markets and the digital economy. Reema.
Well, indeed, it's been nearly 10 years since Jio's commercial launch. It's finally heading to the public markets. Now, remember, Reliance Jio commercially launched on 5th of September 2016. They offered free SIM cards, unlimited voice calls, free data under the introductory offer. And that launch transformed India's telecom landscape almost overnight. It triggered an unprecedented price war and it accelerated India's digital adoption. At Reliance Industries' latest AGM, Mukesh Ambani has announced that Jio Platforms has filed the draft papers with SEBI for an IPO, and this marks a major milestone in the company's journey. Now, Jio's entry reshaped the entire telecom industry. SL got bankrupted, Reliance Communication collapsed, Vodafone Idea merged with Idea Cellular. In 2020, Jio Platforms raised more than $20 billion from 13 large global investors. We're talking about Meta, Google, Silver Lake, KKR, General Atlantic. The list is very long, and at that time, it was roughly valued between $58 to $65 billion. Come today, investor expectations for the IPO or for the Jio valuation is $110 to $120 billion. Jio in 10 years has gone from a disruptive telecom challenger to now India's largest digital platform company with more than 500 million subscribers. And this IPO will mark a culmination of one of the most consequential business transformations seen in modern India. But now let's get to the details about the IPO. Now, this is going to be a pure, fresh issue of 27 crore share, 2.9% dilution. It's an absolutely fresh issue, no offer for sale, which means existing shareholders, which includes the promoter Reliance Industries and other investors like Meta, Google, KKR, etc., will not be selling any stake. The primary objective is to pare down debt, and they're talking about reducing the debt by more than 27,000 crore rupees from the funds raised. Now, ahead of the IPO, let's see the numbers. Now, I think the key takeaway for me is that the company is now entering a cash generation phase. So the top line for the company went up 15%, 1.46 lakh crore rupees. The bottom line, net profit, stands at 30,000 crore rupees. Again, a jump of 15%. Subscriber additions for the company are very strong. They stand at 525 million subscribers. The average revenue per user stands at 214. But as I said, the key is the cash generation. The metric to look at is the EBITDA less capex. Now that number was 1450 crore in FY24, ballooned to 20,000 in FY25, and now stands at 42,000 crore rupees. We're talking about a jump of 29x. Now, why is this number important? Because the EBITDA less capex, the capex is basically the company's 5G built out, the network built out. And this number seems to be indicating, this improvement seems to be indicating that the company's capex cycle perhaps has peaked and is now entering a cash generation phase. Now, for most investors, when you look at the telecom space, the options today are limited. You've got a Bharti Airtel, you've got a Vodafone Idea. Bharti Airtel has been an investor favorite. It's a premium play, it's got higher ARPUs, higher margins, and plus you've got the Africa and Indus Towers optionality. Now, where does Jio scale? Well, in terms of customer volumes. Jio's volumes, subscriber numbers are more than that of Bharti Airtel's India numbers. But Jio is more than just a telecom play. It offers a play on India's digital economy, mobile, home, broadband, enterprise, AI, all bundled into one. And I think this is one of the most awaited IPOs, and it's also the first IPO from the Reliance Group in nearly 20 years. Back to you.
Hima, thank you for putting that together for us. All eyes on that big Jio IPO. Take a short break. On the other side, put the spotlight on the bond markets with Manisha Gupta.
Welcome back. You're watching Trading Hour, and as promised, let's get you straight to all of the bond market action. Manisha Gupta joins in with the latest on that front. Manisha.
Well, thank you for that. And the crude oil prices yet again coming back below $80 a barrel is supportive for the bond markets. Remember, at one point in time, early Asia, as soon as the week opened, we did go to 81 plus kind of levels as well, but trading just around at 79 at this point in time. The US to Iran are reporting progress in sense of peace conversations there, even despite threats that we've seen coming in from both the countries over the weekend there. The rupee, in the meanwhile, has seen a very slight decline versus the US dollar on your screens. This is after banks seem to be buying dollars for their importers therein. Interestingly, the FPI holdings of state government bonds has surged nearly 5 times in last 2 weeks. This is since the RBI measures on the MPEC date have come in. If you look at the overall numbers on Friday, that is 19th of June, the overall state bond buying via the FPI stood at around 22.4 billion. This is versus 4.17 billion that we saw on 4th of June. So very sharp increase, as you can see on those numbers there. Interestingly, the largest of purchase of nearly 5 billion came in just about at Chhattisgarh's 7.0% 2029 bond. So that was the most bought one there. The state bond issuances in the meanwhile for the current quarter seem to have crossed $1.86 trillion. So strong numbers continuing on to that one as well. And then when you look at the private bond issuances, well, that list continues to grow longer every single day. The latest one on the screen are India infra debt. They're looking to raise nearly 15 billion rupees, and they're doing it via issuances of bonds maturing on December 2031. There also is India Renewable Energy Development, which is also looking to raise 15 billion, and they are doing it via bonds maturing in 2029. Trent Power, in the meanwhile, also is looking to raise a total of around 38 billion. They are doing it via issuances of nearly 4 bonds with different maturities in the years to come. And then there also have been reports, and we've been reporting that on that the board of Godrej Industries has now improved issuances of 2 series of NCDs set up for nearly 10 billion rupees therein. There have been some very good bond issuances that have racked in some money as well. Cholamandalam Investment and Finance is one of those. The board has allotted issuances via NCDs worth nearly 1 billion therein. And then you have Bajaj Auto Credit Limited also has raised 5 billion. They have issued 3-year bonds which are maturing in 2029. And finally, Aadhar Housing Finance should come in on your screens, and the board here as well has allotted NCDs worth 2.5 billion rupees.
Manisha, thank you very much for bringing us that. But, with that, let's also shift focus to the NBFC space, which has very much been, the chatter the last couple of weeks, especially with the RBI announcements coming in, which makes banks go tap some of the overseas market, the expectations of a longish RBI pause, and what all of that means for the NBFC sector. Let's bring in Ajit Kumar, who is the BFSI head of JM Financial Institution Securities, who joins us now on the show to discuss how the quarter gone by has been for the NBFC space and the way forward, what could play out in favor. Ajit, thanks very much for joining us here. The first question is that, do you think we're in for a re-rating for the NBFC sector given the recent run that they've had? And now this expectation that RBI's rate hikes could perhaps be later than initially anticipated on the back of what's happening in West Asia. And secondly, every dollar that banks are now going to borrow overseas, thanks to ECB raising some of those deposits overseas, means $1 less that they borrow in the domestic market. So in terms of cost of funds advantage also, that would continue for NBFC. So how do you put all of that together in terms of how the space could look in the near future?
You said it right. Good morning, everyone. Thanks for having me. At this particular point of time, at a sectoral level, we prefer NBFCs over bank, mainly due to the vast difference in the earnings growth. While we do have our preferences both in banks and NBFCs individually, but at a sectoral level, we prefer NBFCs over banks. Just to give you some numbers, for 16 banks that we cover, profit growth in FY26 was only 7%. And even in FY27, it is expected to remain somewhere around 7 to 8% only. In contrast, for 24 NBFCs that we cover, PAT growth in FY26 was 22%, and it is expected to be more than 25% for the next 2 years. And this difference in the earnings growth between banks and NBFCs is actually leading us, us being more bullish on the NBFC side versus bank side. Now, for NBFCs, what is happening is that there are 3 positive variables which are playing out. One, your loan growth is quite robust. So for all the, especially the diversified names such as Aditya Birla Capital, Bajaj Finance, Tata Capital, Piramal Finance, all the diversified names are printing more than 20% loan growth. That is point number 1. Second is, since the last MPC meeting, the NBFC yield across, let's say, 10 or 1 year, 3 year, 5 year, all have come down by roughly 25 to 40 basis points, which is going to have positive delta on the cost of fund side. And last, post-March, we haven't seen any deterioration in the asset quality matrices in any of the segments, at least till now. So we have done our channel checks, and even in the month of May, we haven't seen any, much deterioration in, especially in some of the vulnerable segments such as, LAP, MSME, unsecured loan. There might be some inch up here and there, but we haven't seen any, anything, materially negative as far as asset quality is concerned. So all these three variables is leading to, higher earnings growth for NBFCs versus banks. And that is why we are, more bullish on NBFCs versus banks. Having said that, within NBFCs, as I said, we prefer diversified financials more like AB Cap, Bajaj Finance, Tata Capital, Piramal, etc., followed by housing finance companies, then MSME lenders, then vehicle financiers, and at last, MFI names comes into picture. In the banks, we actually prefer, private banks over PSU banks, mainly because of the fact that while going into FY27 for the overall banking system, profit growth should not be more than 7-8%. But if we bifurcate that between, let's say, private banks earnings growth versus PSU banks earnings growth, in our estimate, private banks earnings growth is going to be more than 15%, whereas PSU banks, earnings growth should not be, or in fact, their profit should come down by at least 4 to 5% in FY27. So yeah, I mean, valuation ultimately is a game of earnings growth, and wherever earnings growth are there, that that's where majority of re-rating should happen.
Ajit, thank you for taking out time. I was just reading your note on the MSME space as well, where you mentioned that the stress is showing early signs of stabilization, and you mentioned that there could be some monsoon that we are warning of, as the Met Department is warning of. Would that not be a sector that becomes the first hit, the MFI/MSME/ those kind of sectors?
Yeah. No, you are absolutely right. And that is why within NBFC, so NBFC is a very diversified space, right? We have diversified financial on one side, housing finance companies on the other side, MSME lenders on the other side, vehicle financiers are there, and then MFI names are there. And that is why in the opening remark, when I gave you the pecking order, it is actually diversified financial at the top, followed by housing finance companies, then your MSME lenders, vehicle financiers, and MFI names at the last. This is basically to factor in any negativity that might comes in the asset quality because of the subpar monsoon. You are absolutely right. If let's say monsoon is deficient, rainfall is deficient, it is going to have negative impact on some of the segment. Let's say, for example, CV financing or tractor financing, and even in, let's say, lower state of the society, which is basically included in the MFI names. So these are the segments where we need to be a little bit cautious. But within NBFC, the larger ones, which is basically your diversified financials, which are basically present everywhere, whether it is unsecured loan, housing loan, or let's say, auto loans, that is the segment, where we are, most positive at this particular point of time.
Ajit, let's get to some specific names. Tata Capital, Piramal Finance. Do you believe they could be, great compounding stories from here? Those are two names you've particularly highlighted in your report as well. As having potential. In Tata Capital, you have an add-on, and Piramal as well, I believe.
Yeah. So actually, we upgraded both Tata Capital and Piramal Finance, from add to buy. The one thing which is common between both of them is both of them are having largely secured book. Even in case of Tata Capital, more than 60% of the book is focused towards housing loan and corporate loan, and within Piramal Finance as well, more than 60% of their retail book is dedicated towards housing and LAP. And housing and LAP is basically one segment where we should not see much deterioration in asset quality because of this West Asia crisis, or maybe because of this subpar monsoon. So that is one. Asset quality trends should be better for these two names versus other lenders. Second is both of them have the capacity to grow more than 20-25%. Tata Capital, being a AAA rated entity, is able to borrow at a very competitive rate, and they should able to grow their loan book by more than 22%. Whereas similarly for Piramal Finance as well, since they have run down their legacy wholesale book over a period of time, and now the legacy wholesale book is right now only 3% of the total total loan portfolio, they should also be able to grow more than 25% in the next 2 to 3 years. So yeah, less risk on the asset quality side, their ability to grow more than 20%, and at the same time not much impact on the cost of funding side because of decline in the yields. And on top of that, Piramal especially is trading at a benign valuation of 1.3, 1.4 time, which is frankly speaking is the cheapest, or one of the cheapest across, let's say, diversified financials, or across NBFCs. And NBFCs, most of the names are trading at more than 2 times. So yeah, these are some of the reasons why we have upgraded Tata Capital and Piramal recently, and we believe that both of them can be a good compounding story going forward.
Ajit, very quickly, if you could tell us about HDB Financial as well. You have an ad rating as a target of 660, which is still below its issue price of 740. What will it take for HDB Financial for it to re-rate and then deliver returns that are substantially higher than its issue price?
Yeah. No, so actually, we had actually upgraded, our target price for HDB Financial is 710. Probably, after that we had changed. So even, for HDB Financial, we like it. The only problem is with HDB Financial at this particular point of time is in next couple of years, our loan growth estimate is 15%, which is probably the lowest among all the, diversified financial. All the diversified financial that we have discussed till now, Tata Capital, let's say, AB Cap or let's say Piramal, all of them are going to print more than 20% loan growth. Whereas for HDB Financial, loan growth is going to be, somewhere around 15-16%. While, rest of the variables are looking great for them as well, but mainly because of this difference in the loan growth profile, probably we can say that, we are more bullish on Piramal and let's say Tata Capital versus HDB at this particular point of time.
All right, Ajit, out of time, but great to have you today. And thank you so much for sparing time in joining us here. Let's send it to a break. When we return, we're going to discuss market technicals with Saumil Mehta of Mirae Asset Sharekhan, also get his top trading ideas.
Welcome back. Still holding on to levels of 24,150 is the index. Saumil Mehta from Mirae Asset Sharekhan is now joining in for a quick chart check and some trading ideas as well. Saumil, thank you for taking out time. But now that the index is decisively held on to that 24,000 mark, what's the next level of resistance that you see on the upside, and your stock calls as well for the morning?
Good morning to everyone. Market has been steady above the 20 and 40 daily moving average, which is a great sign for the markets, creating high top, high bottom formations on the daily charts. Previous week high has been also crossed on the upside. The most important part here is that the markets have taken support at very crucial level, that is 23,000, 23,100, which was the 61% retracement of the previous rally. So now that crucial level has been held on to, and we are stable above the short-term averages. Now the next level to watch out as resistance is 200 daily exponential moving average, which is close to 24,460 levels. I'll be expecting markets to break above those levels, and the next resistance, which is the previous swing high, is 24,600. That will be a key resistance as well, but that will be a confirmation for a medium-term uptrend. The next target in the medium term would be 25,100, 25,150 on Nifty, and my strategy would be to buy on declines. Now, the two stocks which I've chosen is one is Supreme Industries. Supreme Industries has broken out of a small consolidation pattern, trading about 20 and 40 daily moving average. In the very short term, my target is 3740 and my stop loss is 3500. And the second stock which I've chosen is PFC. PFC, we've seen a small correction in the last couple of months and then now taking support at 200 daily exponential moving average. Today, we have seen a breakout of a small consolidation on the upside. So my target for PFC would be 470 and my stop loss would be 428.
All right. Thanks very much, Somil, for joining in with that. We have to slip into a short break again. But back next with fundamentals with George Thomas of Quantum AMC on the markets in just a bit. Welcome back. You're watching Trading Hour, and let's get in our next guest, George Thomas from Quantum AMC, joins us now to discuss market fundamentals and his top sectoral picks. George, thanks very much for joining us here. Of course, with what's happening in West Asia, the crude oil prices, there were headwinds for several sectors, auto, cement, and whatnot. But now with, some signs of a resolution there, who do you think will be the key beneficiaries as this cycle turns? And, on the flip side, because of what's happening with the weak monsoon predictions, where do you see the most earnings downgrades happening in the near term?
Okay, thanks for having me on the show. So when we look at the input cost pressures, the obvious beneficiaries if there was a durable solution to the conflict in West Asia would be the oil marketing companies and some of the commodity plays and some of the commodity plays where oil and crude derivatives are a key ingredient or a key input material. They would benefit. They would benefit in the near term. But the factor to watch is, how so whether we can call the current scenario a durable solution at this point is the key thing to watch. And investors should be cautious or should be mindful of the normalized profit levels of these companies. So even some of the gas utility companies would be beneficiaries if crude and the overall energy prices were to correct, because the offtake can improve from these levels. But the key thing to watch is some of the how the valuations are faring at this point and the normalized earnings levels, because the fluctuating earnings levels may not be a key, may not be a good indicator in terms of identifying the attractiveness of companies.
How about the oil marketing companies, George? A couple of brokerages recently came out with notes on them. One is believing that their fortunes are now turning after the de-escalation in West Asia. The other believes that they are just tactical plays as of now because there are still some underlying risks for them. Which camp do you lie into? There has always been this valuation comfort plus dividend yield tailwind for them, but is that enough to make an investment in these companies?
See, oil marketing companies would be obvious beneficiaries because marketing margin would be a clear reflection of how the global crude prices are panning out. And as if the crude prices were to correct, there is obviously a case for margins to expand for these companies. But the key thing to watch on these companies is they would always be in the limelight in the sense that regulators may not want the end pump prices to fluctuate in a big way. And whenever there are volatility in crude prices, their profitability would take a direct hit to that extent. So therefore, being mindful of these risks, we have decided on certain valuation bands. And if we were to apply those valuation bands at the current prices, they have not reached a level where we would earn the threshold return levels for our portfolio for the next couple of years.
So, let me just extend that and ask you, if you apply this valuation band, overall on the market sectors there, where there's been meaningful correction and now pockets of opportunities are emerging, where would you place your bet?
If you look at our portfolio, the largest weight continues to be in financials, which is a mix of private sector bank and insurance companies. There is one AMC company where the upside is limited and therefore we have trimmed a bit. The second largest pocket where we are allocated right now is IT, where purely because of valuation reasons, demand could be a bit volatile in the near term. But if we want to take a slightly longer term view, the current valuation levels are quite attractive. And the other recent additions have been spread across a variety of sectors. There has been an addition in a cash logistic player. There was an addition in a pharma player where the street was worried about one of their drug going to a cliff. But we were kind of hopeful about some of the other drugs in the portfolio kind of compensating for that, and that has played out. Even we were able to add into a real estate player who is one of the largest branded play and who would be a beneficiary in times of stress and when the macro environment goes through a rough patch.
Now, speaking of real estate, George, there has also been this fear. You also saw the updates that have come in from the BMC recently due to the paltry rain that the city has received so far, the pause in construction activity that has taken place. Do you see that as a headwind emerging for a lot of these city-based real estate companies? Because then there will be execution delays and delivery timelines get delayed as well, and therefore their sales guidance is also come into threat because of that.
See, clearly, as execution slows down, some of the milestone-based payments would be delayed, and that would directly impact their cash inflow. That is one part. And the second part is even the sales run rate is likely to slow down if there was an execution delay. But when we value our companies, we are slightly longer term. So we are not too worried about what could happen in the immediate near term, and we would look at a longer term picture. But the player where we have taken a position, they have a fairly diversified exposure across key cities, and they're not purely reliant on the Mumbai region to that extent. Plus, they have a fairly strong balance sheet. So even if there were to be a slowdown in cash inflows in the near term, they are well positioned in terms of withering through that this phase, and there could be therefore they would be a net beneficiary. So investors have to be cautious if balance sheet is weak and if they are over-indexed to a particular city.
All right, George, appreciate you taking the time out and joining us here today. Thanks very much for being here. We sip into another short break, but when we return, we're going to be joined by Mitul Shah of EVA India and Bhavesh Shah of Equirus Capital to discuss SEBI's revival of open market buyback. Stay tuned. Welcome back. Now, as promised, SEBI has brought back open market buybacks starting the 1st of August, reversing a move it made just last year after changes in the tax regime made this viable again. Let's first bring in Mitul Shah, partner of capital markets at EVA India, for more on this. Mitul, thanks very much for being here. You know, the timing is pretty interesting. You have a market where we're going to get a flood of supply from IPOs that are planned, the QIPs, the OFS, etc., that we've been seeing. And now this buyback option opens up. Do you think that'll be a meaningful counterbalance to all of this supply that's also coming into the market?
Good morning. Thank you for having me here. Yes, this is a welcome change by the regulator. It offers the option to the issuer to select between the two available options, which is your tender route and the market route. What the market route does is it offers the company the ability to buy out the tail investors who have been selling the stock and creating pressure on the stock. The 66-day window that it offers, it allows a price stability mechanism for the stock in concern. And buybacks are also a tax-efficient mechanism as they are taxed at the LTCG or STCG rates, as the case may be for the shareholder, versus dividends that are taxed at the income tax bracket. It also offers a lower acquisition cost compared to the tender route, where the company is able to purchase based on the current prevailing market dynamics. So all in all, it is a welcome route. It offers companies one more option to select between a market buyback and a tender route.
But how beneficial is this for a small ordinary shareholder? It might be beneficial for a company, as you just highlighted, for the tax purposes, for the lower cost of acquisition. For a small shareholder tendering a share in a tender offer, he at least knows that this is the price at which his share is going to be repurchased and he's going to get an X amount of premium. For an open market buyback, how does it benefit him? Because for a person tendering them in an open market buyback, A, they would not be aware of the price, and B, there is this uncertainty of whether that share would be repurchased or not. That's the second question.
So yes, a tender offer does provide a price mechanism to the retail investor in terms of at what price their shares will be acquired, and that window has remained open only for 5 days. A market buyback, on the other hand, does provide the necessary liquidity to the tail investor who can exit. Yes, in terms of a price parity, the tender offer does provide a better price parity than an open market buyback.
All right. We also have, do stay on, Mitul. Bhavesh Shah, MD and Head of Investment Banking at Equirus Capital, joining in now. Bhavesh, hi. Thanks for joining in the discussion. Quickly, your thoughts on SEBI reintroducing this and whether corporates will favor this over dividends, and looking at the balance sheet of companies also. What are the sectors or the companies that are cash rich that could come out with the buybacks? I mean, MNCs, IT Pack, who'd be the first in the line, you think?
Yeah, thanks for having me on the show. But, this is a very welcome move by SEBI, especially companies who are in the space where they are generating a lot of cash and with no very visible capex needs as far as finances are concerned, and wherever they feel that the stock is not justifying the true value or is it below the long-term value, it makes a lot of sense for companies to do buyback. And within that, I think the stock market buyback route, which was stopped by SEBI because of the inequality which was present in the earlier situation. Now, with that being corrected, I think it tends to give out a very positive and a flexible way of doing a buyback, in my view. It also signals a strong intent from the company side of the long-term fundamentals of the business to the investor. So I think it's a very welcome move from a SEBI's perspective to introduce stock market buyback back again. And I think it's a great opportunity for companies, especially in these sectors like IT. Wherever they are generating more cash, they can use this route to kind of create more shareholder value by accreting to EPS.
Bhavesh, I was asking the same question to Mitul as well. For an open market buyback, do you believe that the retail shareholders will have the kind of response for it as compared to a tender offer buyback, just for the pricing mechanism that it offers?
No, I think so. For the retail investor, I think earlier it was a very non-transparent mechanism when it came to the stock market buyback, because there could be order pricing mechanisms which were kind of they have been done away with. So as far as the retail investor is concerned, on a buyback which is happening through the market, it is as good as selling in the market. And as far as tender is concerned, to that extent, the shares are kind of proportionately bought to the extent of demand which is generated. So frankly, from a retail investor perspective, I think the buyback from the market tends to become a little more, if I may use the word, more certain in terms of what the outcome could be. Whereas in case of a buyback through tender offer, it will be subject to proportionate, proportionate acceptance.
All right, Mitul and Bhavesh, thank you so much for joining us here today. Short on time, but that was a rich discussion nonetheless. Thank you very much for sharing your perspective. Now we'll move on to a CNBC TV18 exclusive, where we understand that the government is set to sell stake via an OFS in yet another PSU. Let's go across to Sudarshan for the details on this one. Sudarshan, take it away.
So over the last few weeks, we have seen that government has been launching several OFS to raise funds. And now we understand from sources that government is likely to launch an OFS in Cochin shipyard. We don't know exactly what the quantum can be, but the price that we understand from sources that it can be at a 6 to 8% discount to current market price. And so far this year, government has raised more than 16,000 crore via OFS. And going forward over the next few weeks, there can be OFS in PSU companies, and number can be around 6 to 7. That we understand from sources. We have written to Dipam regarding this, and we are still awaiting the response.
Cochin shipyard, then another potential OFS in the offing. Sudarshan, thank you for that update there. The stock down around 35% from its 52-week high of around 2,300, down 10% for the year so far. And the government shareholding as of the March quarter shareholding stands at around 68%. I'll get you more on this as the day goes by. Take a short break. Back with more on the other side.
Welcome back. As always, let's get you the macro signal as well. For the markets holding on well above 24,000, holding up with gains of about 120 odd points as we speak, 24,140. The Sensex as well holding on with gains of almost 425 points. Oil prices, they're doing well. There was some volatility today because the markets reacted to the conflicting geopolitical signals from the Middle East and the progress in these high-level diplomatic talks that are taking place in Switzerland. So after an initial surge, the market opened, which was driven by fresh threats from, US President Trump. Prices have since retreated following reports of some progress being made in the negotiations. Brent crude currently, in fact, below $79 per barrel, almost 2% down after reaching an intraday high of $82.30 a barrel. The rupee has, been trading flattish today, now at about 94.48 against the greenback. The currency is, of course, benefiting from the cooling oil prices and the optimism surrounding this peace deal. But the gains are being capped by a strong US dollar and technical interventions by the Reserve Bank of India. Now, what do I mean by technical interventions? Well, RBI is seen to be actively rebuilding its forex reserves, which had fallen to about $681 billion from the peak of $730 almost billion a few weeks back. So this practice of buying dollars to shore up reserves is effectively capping the upside for the rupee. And of course, the dollar index is also trading firm, driven by the hawkish Federal Reserve, and that is limiting how much the rupee can appreciate. Meanwhile, you have the 10-year benchmark index, 10-year benchmark GSEC yield hovering around that 6.8% kind of a mark, flattish in trade today after snapping that 6-day falling streak. that we saw last week. So that's as far as the macro setup is concerned. Hormaz, over to you.
It's still a pretty decent market for now. We're still around about 120 points higher on the index, although we have cooled off ever so slightly from the highs of the day. Still around about 24,130 is where the index is. The one stock that is continuing to extend its gains, though, is EPAC Durables. That stock is now up 15% as we speak. So good going for that stock after that very strong update that Voltas reported earlier in the day, and 15% higher on EPAC Durables. So that continues to do well. Kirloskar Industries continues to gain as well. A couple of small cap names that are still making moves is Igarashi Motors. That stock is up 17% in today's session. And well, as many as close to 10 or 12 stocks on the small cap index are trading with gains in excess of 10%. They include the likes of EMS, Subros, NIIT, Igarashi Motors, as I just highlighted, and of course the ones that we spoke about earlier in the show as well, the Blue Cloud Softex and the likes. NSCL Industries too is locked in a 10% circuit. Take your leave on this edition of Trading Hour from Ritu and me. Thank you for watching. Halftime report on the other side.
Stocks climb led by heavyweights after US-Iran make progress in talks. IT services and oil and gas stock leads the charge.
Reliance Industries' deployment of AI across businesses and the scaling up of its new growth engines, deep tech, new energy and FMCG, along with the likely $4 billion Jio Platforms IPO get a big thumbs up from analysts.
Voltas races past the 1 million AC sales mark in FY27 on the back of heat wave and delayed monsoons. LG Electronics too flags good summer season for ACs despite a 10 to 12% price hike. Stocks of AC makers perk up.
The number of oil tankers sailing through the Strait of Hormuz see a distinct pickup even as US and Iran announce a 60-day roadmap for a deal after talks in Switzerland. Brent trades at below $79 per barrel mark. Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Vinny Motiwala. Vinny, good afternoon. A fresh new week, a fresh day for our own markets and shrugging off some of the volatility that we could see with respect to the PE stocks. Indian markets higher in trade. It's a good start for the bulls on a Monday. 122 points higher on the Nifty. We are comfortably above the 24,100 mark. It's a 30-point downtick from the highs of the day, but there's nothing worrisome in that case. But most of the sectoral indices are in the green, barring the FMCG pack. Nifty IT is the top gainer with gains of around 1.1%, followed by oil and gas. We have some contribution coming in from Pharma. There's realty. Basically, it's most of the sectors which are contributing to the gains that we are seeing today. And IT has made a comeback.
IT has made a comeback. Sonal, good afternoon to you as well. And in terms of what's not doing well today, it's just the FMCG pack. That's a bit muted in the trading session, right? Down almost 0.1%. So we'll watch out for that in the trading session. A lot of individual movers in trade, especially coming in from the broader end of the market as well. New India Assurance is one such name that has been buzzing in trade, and this is coming after the NSE IPO announcement that's come in. And we've seen significant gain coming in for the stock since that announcement came in, right? So New India Assurance, keep an eye out on that. Other than that, we have Urban Company that's buzzing in trade and a lot of other movers. But we have a very exciting lineup for you all on the show today. And first up, we'll put the spotlight on affordable housing segment with the sales in the segment having halved since 2019. Now, to decode how the industry is navigating these challenges, we'll be joined by Prashant Thakur of Anurok as well as AM Karthik of ICRA to talk to us about that. We'll also be putting the spotlight and focus on buzzing stocks and big movers in the trading session as well. So stay tuned in for that. We'll also have our commodity corners with Manisha Gupta, who will take us through a conversation with Christoph of Crystal Energy to discuss the recent volatility in crude prices. That's the lineup for you all. But first up, let's go across to Vivek, who is here to take us through the stocks that are moving around in the trading session. Afternoon, Vivek.
Well, good afternoon. Quite a strong move that you're seeing across the markets, especially in the broader end of the markets, and especially when you're looking at the IT pack. Remember, the top laggard on Friday, today doing very well in the session. In terms of individual names that you're tracking, can't look beyond Reliance Industries, one of the top gainers on the Nifty, supporting the market very strongly, almost 2% higher, and this is post the strong commentary that came in the AGM. The other stocks are doing quite well. Kirloskar Oil Engine, and it's also taken up along with it the entire Kirloskar group names. The company has received a data center genset order, and JM Financial has gone ahead and upgraded this particular name higher by 20% today. Voltas, remember, some positive news flow coming in. The company has gone ahead and surpassed the 1 million AC unit sales as far as FY27 is concerned. The run rate much stronger versus FY26, and this is something that the street has liked. Power Mech Projects, quite a large order win coming in, over 100,000 crore order that the company has received from JSW Thermal. And the IT pack, again, the rebound over here has been quite good. After the strong down move that we saw on Friday, today we are recovering most or recouping most of the losses. Coforge, Tech Mahindra, Persistent, some of the top gainers today. In terms of stocks that are seeing quite a bit of selling pressure, Aavas Financials, the CFO as well as the CRO have both resigned with immediate effect. But the company gave a clarification, and that particular stock has rebounded quite smartly off the day's lowest point. Varun Beverages, one of the top laggards as far as the F&O space is concerned. Cummins India, again, some competition coming in from Kirloskar, and as well as this particular name seeing some amount of selling pressure in the F&O space. And Craftsman Automation on higher volumes, this particular stock too seeing quite a bit of selling pressure, almost 5% low for Craftsman today.
Thank you so much for joining us with all those details, Vivek. So those are some buzzing stocks from the broader markets, but Reliance Industries is the big boy, which is buzzing on the upside. Big moves coming in here from that stock after the AGM announcements that the company made on Friday. Let's talk about what brokerages are making of this move. CLSA has an outperformed rating with a target price of 1,800 rupees a share on the stock. They spoke about how the company revealed AI as a core tool used by the company across its businesses. They will commission their first compute capacity by the end of 2026, and it also showcased a variety of Reliance's AI solutions that the company is using in other segments of the business as well. A foray into underground coal gasification. Remember, that's where Center has also announced a big outlay, with multi-sector exports were revealed as the new areas of growth, and a target to double EBITDA in the next 5 years was announced. So the target price that they have currently does not assign any value to AI, to new energy, to the FMCG media or new materials business. So there's definitely an upside that could be seen from here on. Nomura also has a buy rating with a target price of 1640. Jio listing is expected by the end of 2026. The valuation band is anywhere between 117 to 127 billion dollars. AI is the new growth engine for for Reliance from here on. Reliance Intelligence moves from plan to execution because the Jamnagar Sovereign AI Hub is targeting first 120 megawatt of capacity by end of of 26. New energy turns on. That's the term that they've used because now solar cells and modules which are already commissioned, first phase of the 40 gigawatt hour battery commissioning will be done this year itself, and New Energy will report its first revenue from FY27. That's a big move, and the $3 billion energy supply agreement with Samsung C&T will be an important update as well. Jefferies too has a buy rating, target price 1675. They reiterated some of the objectives they stated back in FY25, and FMCG investments are going to propel revenues to levels of 1 trillion by 2030, and recovery in retail growth could re-rate the stock from the current standard deviation levels that we are seeing. Lastly, Motilal Oswal, they also have a target price of 1655 with a buy rating. They like 5 major value creation pathways for Reliance Industries. How oil to chemicals is going to be the secular growth revenue stream creator. They are accelerating and commissioning early revenue generation in new energy. New energy is going to be one of the biggest growth pillars from here on. Reliance Intelligence into the most prolific growth platform. Largest FMCG company is what they expect RCPL to be, and $125 to $150 billion of exports by 2030. So big targets. Some of it what they announced in 2021 are coming to fruition now, and now there are fresh capex plans that the company has. So big announcements, and that is something that the street definitely likes.
Absolutely, big announcements, and that's something the street likes. As of now, the stock is up almost 2%. But Sonal, there's another stock you're tracking as well, Nosil. That's up 20% almost in the trading session. Specific reasons for that?
So, the company had announced back in March that the Commerce Ministry had approved the initiation of anti-dumping duty on rubber accelerators from China, European Union and the US. Now, DGTR, that's the central government, has given the final approval for that. The final go-ahead has been received. So, in March as well, when this news had come by, the stock surged around 20% in that week itself. So, there's a follow-on buying that we are seeing. Why is that? Because all the products and geographies would be positive for the company. It will add around 40% to the top line. The company had indicated that they are expecting this final approval to come by in their Q4 results, and it has come by, and hence the sharp uptick in the stock. So again, this is not something which was not known. It was largely expected. So if it hadn't come, that would have been a bigger disappointment. But Street nevertheless likes this approval, which was largely anticipated.
Absolutely. Largely anticipated approval that's come in. Stock is up 19.9%, 20% approximately in trade. But let's move on and actually slip into a very short break. After the break, we'll come back and we'll focus on the affordable housing segment, with the sales in the segment having halved since 2019. To decode how the industry is navigating these challenges, we'll be joined by Prashant Thakur of Anorak as well as AM Karthik of ICRA. Stay tuned on for that conversation.
Welcome back. You're still tuned into Halftime Report. It's time to focus on the affordable housing segment. The sales in the segment have been declining. The affordable housing launches have also declined in 2025. To understand what the industry is doing, how they're navigating the challenges, and what the real ground reality is, we are joined by Prashant Thakur, EDN Head Research and Advisory at Anirog. We also have with us M. Karthik, Senior VP and Co-Group Head Financial Sector Ratings at ICRA, to understand the lender's perspective as well. Gentlemen, good afternoon. Thank you so much for joining us. Prashant, let me start with you first up to understand what the ground reality is looking like. The conversations that we've had indicated that affordable housing is going through one of its worst phases when it comes to sales and launches. Can you give us a sense in terms of numbers? How has the performance been? And is it a builder-led problem or a buyer-led problem?
It's, no doubt that last 3 years we have seen a phenomenal growth in overall residential real estate, but it came at a cost of affordable housing. We saw a K-shaped recovery where, upper segment really did well, and affordable, which accounted for almost 45% in 2019. By the end of 2025, its share was, hardly 13 to 14%. So that's the sad story, that has played out, unfortunately. And, it's kind of more of a structural problem that I would say. The definition of affordable housing is kind of quite outdated in terms of today's context. And, affordable housing has a very limited capability to absorb shock. And what we have seen during these disruption, which was, caused by the war and, various other disruption in terms of tariff, the ability to absorb cost was quite limited for this sector. And also after pandemic, what we have seen is that the preference for larger houses was quite significant, and that's where the developer focused on coming up with the launches. And a couple of factors which includes steep land prices that the developers acquired land at, the increase in construction cost, and also in the demand side, if you notice, the buyers of affordable segment comes from I would say unorganized sector. So for them, credit availability in this scenario becomes a challenge. So I would rather say, in spite of overall sector doing quite well, affordable has lagged because of structural challenges, and its ability to absorb shock is very limited.
Okay, structural challenges, and the segment is unable to absorb challenges and shocks that we're seeing. Mr. Karthik, let me come to you because your report says that there is moderation, but there's been decent growth. So it really doesn't match the commentary that you are giving and what Prashant is saying. Can you explain what your report suggests? Are you seeing green shoots? Is it in projects which does not match the definition, because that also is outdated? Give us more sense of what you are seeing on ground.
Sure, good afternoon. From an affordable housing entity perspective, right? So we are looking from financiers. They specifically focus on tier 2, tier 3 locations and so on. So the data that we see in general from a real estate point of view does not get into so much granularity. So from an affordable housing financial perspective, about 50 to 80% of their exposure is towards semi-urban and rural locations, right? Depending on the entity that we see, and a sizable portion of the funding, especially from an affordable housing entity perspective, about 40% of their funding goes towards self-construction. When I mean self-construction, is the borrower constructs his own house. He has a land, he just borrows and constructs the house. All of this does not get captured in the broader scheme of data, which comes out from a housing sales perspective, which is more organized, if I have to put it from a market perspective. So this is where the divergence comes in. We expect this segment to grow at about 20%, while you see the organized part of this business, which is somewhat primer kind of a product, you will see a much slower growth of about 12-13%. So the divergence is essentially the nature of product that is getting financed and the target borrower segment, which is the financials target vis-a-vis what is available at a headline, sales data level.
Karthik, I just want to understand, right? Are banks actually becoming more cautious also on the lending towards lower income borrowers? How is that also? If you could help us understand that also.
Banks have a larger play in the prime segment, which is 25-30 lakh average ticket size, and we have a clutch of housing finance companies which do operate in this space. When I say affordable housing entities, these are the entities who have an average ticket size of about 10-15 lakhs, right? So this forms about close to about 15-18% of the total housing finance company market. When I say housing finance company, it's only the non-banks. In the broader scheme of the housing market, which is close to about 45 lakh crore, the affordable housing finance accounts for only about 1.5 lakh crores. So it's a very small segment at this point in time in how we define affordable housing. And the growth on this very small base has been quite high and quite healthy, at about 20-odd%.
Prashant, you spoke about it, that how affordable housing, the definition is quite outdated as well. And we understand that, industry also wants affordable housing, that cap to be raised also. Your thoughts on that, and, what will it mean also in terms of EBITDA margins? Are there normally affordable housing has thinner margins versus premium?
To answer the first part of your question, yes, the definition needs a reset. Today, affordable housing, as per definition, is still capped at 45 lakhs and below. And this definition was set, I think, almost 6-7 years back. And after that, we have seen a huge run up in the cost. And then, it doesn't make sense to get stuck at 45 lakhs. So in my opinion, and the recommendation that we have been making is that at least for tier 1 cities, the definition should be increased to at least 85 lakhs to 90 lakhs. So that would bring a lot of inventory under the fold of affordable housing and would classify for 1% GST and other SOPs that this sector would get. The second part of the question that you asked is whether the margins are thin. Yes, affordable housing operates on a wafer-thin margin, and that's where I say that the ability to absorb shock is also limited, and coupled with a very wafer-thin margin makes this product very unviable for developer in today's scenario, where your construction cost has gone up by 10-15%, land prices have shot up, and there is highly uncertain environment that they're operating in. Your approval takes almost 2 years to 2.5 years, depending on what kind of land parcel you're considering. So overall, if you think of these variables, in today's scenario, even if the developer wants to come up with affordable housing, he is constrained by a lot of structural challenges that he's facing.
Got it. So there are structural issues. First, the definition needs to see a change considering the issues that we're seeing right now, and wafer-thin margins for developers, that's not working for them. Karthik, from a lender's perspective, do you think it's profitable to lend to the affordable housing segment? How does it differ versus the developer's POV?
It's an extremely, a profitable business and a very attractive proposition from a lender's point of view. Typically, the yields in an affordable housing business is about 300-400 basis points higher than the prime segment. The only difference is that the cost which comes with it is also higher, and affordable housing entities make a fairly decent. I mean, their industry level ROAs are about 2.83%. While the conventional housing finance companies will operate at about 1.8 to 2% ROA. So it's an extremely profitable business to work with. Credit cost is something that we have not seen a full cycle, because that's the segment has grown so fast that the seasoning in this business has been low. They have tried to keep the credit costs very close to the prime segment. So that's something that we will watch out very closely, because the segment has not seen too much of cycles like a prime segment. But otherwise, it's a very, very profitable business from a lender's point of view. And that's why we see a lot of, housing finance companies getting into this segment. It's a different segment to operate with vis-a-vis their conventional prime, positions. So they try to operate it via, a separate business unit within the larger scheme of things. So it is a profitable business, but it requires a certain set of skills and also branch infrastructure and people infrastructure, which could be different and higher than a conventional housing finance.
Mm-hmm. Okay. Point taken there. Karthik as well as Prashant, thank you so much for joining us on the show this afternoon, helping us understand affordable housing. Where is that moving given the fall that we've seen over the years? what's happening there was important to understand. So thanks so much for that. A quick look in terms of what the market is doing right now, right? When you look at it, 24,120 around that mark, slight bit off the day's highest point, but yes, that's what we'll watch out for. Whether we manage to sustain this 0.5% of gain that we're seeing on the Nifty will be key to watch out for. IT is leading the charge today as well. But on that note, we're going to step into a very short break. After the break, we'll have Dharmesha of ICICI Securities who will join us to discuss some of his trading strategies as well as individual stocks. Stay tuned in. Welcome back to Halftime Report on CNBC TV 18. While the market is holding quite steady, we have some of the names that have perked up in trade in the last 30-odd minutes. Delivery, that's gone up almost 2% in the last 30-odd minutes. Then you have Sona BLW, that's also run up. Indegene is another name that's seen a bit of a spike up. So let's watch out for that. Delivery, like you can see, is trading at the day's highest point. Sona BLW moving back again from the lows and recovering in trade. So moving again towards the day's highest point, as well as Indegene also is seen a bit of a spike up. So that's what we'll keep an eye out on. But let's move on and also say that Carlyle may sell up to 10% stake in Viyash Scientific with a slew of mutual funds and investors keen on the stake. Let's go across to Vivek to give us details on this one. Vivek, afternoon. What are you picking up here?
Well, good afternoon. The stock in focus, or the company in focus, is a company known as Viyash Scientific. This particular company was earlier known as Sequence Scientific. What we understand from our sources is that Carlyle, which is now the promoter of the company with over a 60% stake, is looking to trim up to 10% stake, and this is likely to be done in the block deal process. What we understand is that the mandate has been launched and given to a couple of investment bankers, and a whole host of mutual funds as well as strategic investors have already already evinced interest to go ahead and pick up the stake that Carlyle is looking to divest in this particular name. Now, remember this particular company, Carlyle actually is the promoter right now. Carlyle's stake was actually at 53% when it acquired Sequence Scientific and then rose to 61% post the merger of VS Life Sciences and Sequence Scientific. So post the consolidation, Carlyle's stake rose to 61%. This particular stake is held via two investment arms, CA Harbour Investments and CA Hull Investments. CNBC TV 18 reached out to both Carlyle as well as VS Scientific. We are awaiting a response from both of them. Another important thing to note is that the company recently, last week, actually announced an acquisition. This is for an Italian company. And on June 25th, is when they will be having an investor day, number one, to explain the rationale of that particular acquisition. And also, we understand there will be quite a few investor queries that will be answered, as well as the company will lay the roadmap. This particular company, remember, is in the animal health business. And this particular stock, VS Scientific, is the name that we're talking about.
Okay, all right. Higher in trade at the day's high. Thank you so much, Vivek, for joining us with all those important details. With that, let's move on and get a technical check on the markets as well. Dharmesh Shah, Assistant VP, ICICI Securities, is joining us on the show now. Dharmesh, good afternoon. Thank you so much for joining us. Higher highs in the Nifty, do you think that's a possibility? What's the next important level?
So good afternoon, Sunal. Absolutely, I think so. The week started on a very strong positive note. We managed to hold on to the 24,000 levels on the weekly closing basis. Looks like, I think so, the way the technical setup seems to be forming, it looks like the market seems to be moving towards the 24,500 for the Nifty, with strong support placed at around 23,800, 900. Now, coming to why we remain to be positive for the market, if you look at the market, the faster time of retracement, where the 11 days of the trading session decline get replaced in just 5 trading sessions, indicating a more of a structural turnaround happening for the market. Apart from that, if you look at the market breadth, I think so that is an important indicator to understand the sentiment of the market, where 65% of the stocks are now trading of total Sensex 500s are trading about 200-day moving average compared to 50% of the last week. So it seems to be, I think so there is an improvement in the market breadth. Also, crude oil prices, I think so, trading below the 200-day exponential moving average, indicating a further weakness towards 73, 72 levels, which augurs well for the Indian market. And last but not the least is the mid-caps, I think so the one. The mid-cap index has been on making a new high, and small-cap index has witnessed a falling trend line breakout, indicating, I think so, there's a lot of steam left out for the mid-caps and the small-caps in the days to come. So overall, I think so the outlook remains to be more positive. We believe Nifty should be looking for a target of around 24,500 is a likely target for the Nifty, keeping a stop loss of 23,800.
Dharmesh, could you give us your individual stock picks as well right now?
As far as stock picks are concerned, meaning I think so the way the hotel space is forming, I think so the way the stocks have seen a good correction in the last 6 months, I think so the risk reward looks more favorable for hotel space as a whole. Also, the geopolitical tensions getting eased off, I think so that could augurs well for the overall industry. So among the hotel space, Lemon Tree remains to be a topic at the current market price, where the stock has witnessed a falling trend line breakout, again supported by strong sets of volumes, and also the weekly chart forming higher top, higher bottom formation, indicating a target of around 128, giving a stop loss of 109. Apart from hotel space, I think so banking as a space looks more positive from the current levels. In Bank Nifty, I think so if you look at the ratio chart of Bank Nifty versus Nifty, it is on the verge of a consolidation breakout of last 5 years, indicating in the days to come, I think so Bank Nifty should relatively outperform Nifty, where Kotak Bank remains to be our topic. Now again, for Kotak Bank, again, if you look at the long-term chart since 2020, I think so the stock is holding on to the upward rising channel, indicating I think it's a strong buying demand at the lower levels. Apart from that, 52-week EMA has been holding for the Kotak for a long period of time, indicating I think the structural changes happening for Kotak Bank at the current market price. So Kotak again we look for a target of around 448, keeping a stop loss of 370. So Lemon Tree and Kotak Bank remains to be a top pick.
That point, Dharmesh, we do have some queries. Request your quick reply on these. Neeraj writes to us from Mumbai, holds 25 shares of MCX at 3,450 rupees, wants to know the long-term outlook on the stock. What do you make of this? Is it a buy if we read them from the charts level?
Sundar, if you look at the M6, I think the stock has seen a handsome gain in the last 6 months. I think so. What we see currently, I think the stock seems to be consolidating in this range of 30 to 40 to 3,500. We believe, I think so, for the way the stock is seen as some bit of correction, we expect, I think so, stock to find a strong support at 2,700. But I would advise, I think so, on the bounce towards 3,100, 3,200, one should book the profit.
Dharmesh, we have one more query. Arunima Roy, who's writing to us from Kolkata, she holds 1,000 shares of Grow at a price of 188 rupees per share. Wants to know if she should continue to hold or sell this one. Currently making a little bit of profit on this one. What's your view on the technicals?
Yeah, if you look at the chart from the since there is not long-term history for the Grow, but whatever history we have, I think so the way the stock seems to be behaving this current corrective phase, I think so 185, 86 remain to be the very strong support for Grow. Again, I would say that for the stock to move on the high side, one should book profit around 210, 250.
Okay, all right. Take that point, Dharmesh. Thank you so much for joining us today. With that, it's time for a break now. In our commodities segment, Manisha Gupta will speak with Christophe Ruel of Crystal Energy to discuss the recent volatility in crude oil prices. Stay tuned for that conversation. Welcome back. You're still tuned into Halftime Report. Markets continue to trend higher, 24,122, but they have come off from the highs of the day. So that is something that we need to track, whether those highs of the day sustain or not. A lot of these chemical names, they are surging in trade today. We spoke about Novosil at the start of the show, but there's also Lakshmi Organic, which is up 8% as we speak. There's Clean Science Tech, which is up around 6% right now. Tirumalai Chemicals is the other one, which is surging up around 4.5%. India Pesticides is up 6.5%. Poshak is other stock which is up around 5.5%. Other than that, if we talk about more stocks in focus, the Vedanta Group stocks, they are also higher in trade. But we do have Brent crude prices. They have come off sharply. There's so much to discuss in the commodity space as well. Manisha Gupta is joining us now, and she has a guest with us today. Manisha.
Thank you for that. Yes, Christophe Ruel is Global Advisor at Crystal Energy, joining us on the show now. Christophe, hi, thank you so much for joining in. And finally, it does look like that there is a peace agreement in place. There is a joint statement, and Iran seems to have in detail told us that, yes, there is a waiver when it comes to exports, even unfreezing of some accounts, and the blockade clearly seems to have opened. What is your latest reading and the way the crude oil prices have now reacted to?
I think you're right. It seems as if there's an agreement in place to be, for the most part, still negotiated, but it certainly looks better than it did just a week ago. But we should also be aware that we had several false starts, and this is not likely to be a smooth process. So I would expect, threats and maybe even short-term disturbances to continue occurring. But also the underlying trend now for weeks was one in which, frankly, the US did not have that much choice and had to settle with an agreement which seems to look pretty good for Iran. And that's the trend, and that will continue for energy markets, for the markets for fertilizers, for all the markets of trades blocked in the Strait of Hormuz. That's good news in the short term.
It is. And now the second step of this begins, because there's a 60-day to have a conversation to reach a final agreement. As you said, it's not going to be a smooth thing even.
It's not going to be a smooth journey. That's the only thing we can say with almost certainty, and probably I will be proven wrong. But I think what matters here is that there's two things. There's, of course, the political side, which is at the moment the dominant one, the general trend towards negotiations, towards trying to forge an agreement on both sides. The other is the medium-term implications this has for energy and others. And we have already seen, while the strait was closed, the first reactions on the supply side. Increased pipeline use through Saudi Arabia and through the UAE, trucking through Iraq, through Syria of Iraqi oil. And on the demand side, where we saw the shock being disseminated and refineries being very flexible and producing more of what was needed the most. And repercussions all across these global markets who have started to adapt pretty well. And I think it's a safe assumption that as a result of that shock, global energy markets will become a bit more diversified, a bit more resilient, and a bit less vulnerable. And when I say energy markets in this context, I mean the markets for fossil fuels, mostly for oil and for gas. So that is a positive development. And then if you think ahead a little bit, behind 2026, we have already the announcement in the UAE to make themselves independent from the Strait of Hormuz by building more pipelines. Together with their announcement of leaving OPEC, we still have a situation of general overproduction of oil in the world once the strait is open again. So looking into 2027, we should still see the severe crunch in oil prices, which most analysts expected for this year, but which hasn't happened for obvious reasons.
Oh, yes. Christophe, would you want to put numbers to that? What kind of a surplus are we looking at in 2027? And what's your crude price range going forward, let's say, for the rest of 2026?
Well, you look at it for 2026 until the February attack happened, and for the end of 2025, prices hovered around 60. Most analysts were surprised that they weren't lower. The explanation was mostly China. China jumped in and took the surplus of production over consumption and built up huge strategic storage. So for 27, if we assume again an overhang of oil production over oil consumption of 1 million barrel plus, that would indicate oil prices falling below the $60 frontier. But we cannot exclude that China or other countries now spend a lot of time rebuilding their inventories. So I would not go to these extremes, but certainly several percentages below where it is right now.
Christophe, even as we saw a total closure of Strait of Hormuz for almost 3 months, we did not see the crude oil prices go to 140. Yes, it did go to 120, but a couple of times, and it did not stay there. Would you say it has much to do with the kind of advancement into EVs and the fact, as you mentioned, that many of the producers are now looking at pipelines and alternate routes as well?
It was a very interesting situation because it reflected that the oil prices have changed dramatically since the last crisis in the 70s. And the most important of these changes is that the amount of oil we need to produce our GDP, the things we all enjoy, has decreased by 60% or so over the last 50 years. So we need a lot less oil to produce $1 of global GDP. And what this means is that there is a lot of runway for prices to go up in case of a crisis before we have some dramatic impact on demand. Now, what it also means is that over these 50 years, in most of this oil which has been replaced comes from easy areas where it could be substituted before. And we don't have oil and electricity anymore. We have a lot more EVs, things like that. It means that if there is a disruption, it could hit oil in very strategic locations, which is bearing a lot of economic load. For example, oil used in transport, oil used in shipping. If that were to be taken off the market, there would be repercussions of an uncontrollable nature through the global economy. But until it gets to this point, it takes much longer. It takes much higher prices than it did some years ago. And on the other side, we have, of course, this the situation which you describe, that there's a lot of measures on the demand side which have already come into place. One of them is EVs, which continue this trend of losing less oil. So it hasn't happened that oil was squeezed so badly that prices went into these regions of above 300, which would have had to be reached to be comparable to the 70s. But we may look in a few years' time, indeed, we may look in the rearview mirror and say, okay, 2025 was probably the year in which oil consumption peaked in the world, because these efficiency improvements are likely to continue. And it's already growing only in a few regions, India, China, the Middle East, that's it. And if these regions are now, as a result of this shock, becoming more efficient, we may have seen peak oil demand already without realizing it. May have. It's a big if.
All right. Christopher, also, as we move ahead from here, go forward from here, as you mentioned, China is an important one to watch out for. The only reason that we've seen the crude oil prices decline quite sharply in May and June is because China withdrew, or the demand fell by 3.5 million barrels per day. But China has this thing about coming back into the markets when the prices are low. And if we are trading below 80, with an expectation that we could be looking at prices at 75 or below, would you see China come back into the markets? And at what level, what price do you see China come back?
We think it will come back. I think the answer is that China has played this extremely well. They have used the prices of low prices. They've used the disruption from Russian oil coming into the market to rebuild strategic reserves, whereas other countries like the US have used it to keep their gasoline prices low, to deplete their strategic reserves. So China was much smarter there on a macro level, also under much less political pressure, obviously. But what we don't know, what nobody knows, is how big actually their storage capacity is. So I would expect them to come back if oil prices go low to refill that strategic storage. But how long that can continue for, nobody can tell you except the Chinese government. And one of the big differences is in the US, you can read the numbers and in China, you cannot.
Absolutely. But the headline clearly from Christopher is that we're looking at 1 million barrels per day of excess supply next year, and the prices can go to 60, around that. So
how times change, right?
Oh, yes. You were talking about hundreds, and here we are talking about 60 yet again.
Exactly. Okay, all right, Christoph, thank you so much for those insights. Thank you, Manisha, for taking us through that conversation. That's all about the commodity markets. For now, we'll slip into a short break. Up next, in our Movers and Shakers segment, we'll focus on Kirloskar Oil, there's Texmaco, RVNL, Cipla. There's a long list. You don't want to miss that. Welcome back. You're still tuned into Halftime Report, and it's time for our Movers and Shakers segment where we track a whole host of stocks buzzing in trade. First up, Winnie, Kirloskar Oil, 20% higher. Tell us what's happening here.
Hi. So, the word data center comes in and the stock starts moving, right? So finally, they've gotten a big order, very big order. They've secured a 192 megawatt of order, which is 96 units of 2,500 kVA. That's a unit measured, kilowatt, right? You use to measure for a data center, hyperscaler data center. This is from Hypernext, and this is for their OptiPrime dual core power systems. Now, obviously, this is a very big positive. Because of this, you've seen certain upgrades that came in also for the stock. Now, JM Financials, they've upgraded the stock to a buy from previous ad rating. They've increased the target price to 2,430 rupees per share. Obviously, this is a major breakthrough order in the data center space with a space where it had very minimal presence. Plus, it was more known for, lower horsepower, medium horsepower size of sets that would come in. Now, this is an entry into high horsepower or more production onto the high horsepower side, which is a positive for them, or which even investors are liking it. Now, the company is obviously, looking at these engines of high horsepower as well. They've already achieved the 270 kilowatt also of engines for data centers previously as well. So it'll be interesting to see from here on where they're going to be headed. Even Motilal Oswal continues to maintain their buy rating. They revised the target price upwards as well to 2,350 rupees from earlier 1,900 rupees per share. And clearly, a major breakthrough. The data center side is something that's keeping the stock a buzz. But let's move on and talk about some other order wins as well. And this is from the railway side. We have Devyani to take us through that. Devyani, over to you.
Well, both railway stocks doing well in trade today on the back of strong order wins. Now, Texmaco is first. They received an order worth 253 crores from JSW South Rail Logistics for the manufacture and supply of rakes and wagons. They received two other orders worth roughly around 11.5 crores from Odisha Power Transmission Corporation for the construction of the second line circuit SC line on DC tower on turnkey contract basis, with an order book now sitting at around 5,400 crores at the end of FY26. Now, this continues a strong trend of non-Indian Railways based orders for the company. Now, next up is RVNL. Now, they received an order worth roughly around 2977 crores from NMDC for setting up of buffer stockpiles and blending yard of roughly around 10 million tons per annum handling capacity at Vizag. Now, they continue to build on a strong order book of roughly around 99,292 crores at the end of FY26. So both doing very well in trade on the back of strong order wins.
They are. Thank you for bringing us all those details, Devyani. But we do have Cipla also, which is doing well in trade, 4.5% higher on that one. There's a positive Citi note. Winnie, tell us more.
Yeah, there's a note that's coming from Citi, and this one is a 90-day positive catalyst watch that they're keeping on Cipla, right? Why? What are the triggers that they're highlighting? Near-term US pipeline. So that is the generic Flovent approval as well as generic Ventolin approval, which are launches are there, which investors and, everyone's confident that this will lead to a better profile for the company on the complex drug side as well. Then you have the expected support that comes in for US revenues because of these two as well. So a rebound at the US business. India business, they highlight that is also doing well. The recovery is coming in well in the respiratory segment for the company. So that is also a positive. Plus, there's an Indore facility of theirs that is lined up for a re-inspection anytime soon. And a US FDA clearance on that one could be a near-term catalyst for the company. So a 90-day positive watch is what they're keeping an eye out on. They said that the earnings have bottomed out in the last quarter from the Revlimid, generic Revlimid cliff, right? We've seen those numbers decline. So now that has bottomed out. And again, an up move is what we could see. Valuations at 25 times for FY27 is what they're saying is a risk-reward favorable for the company, and that is why the stock is buzzing in trade. 90-day positive catalyst watch for Cipla from Citi. On that note, we're going to step into a very short break. After the break, we'll get you more on markets and more stock-specific action. Stay tuned.
Welcome back. You're still tuned into Halftime Report. The markets have come off slightly from the highs. There's nothing very worrying. But we do have some of these names which are at the day's low in the Nifty pack. ITC, for instance, has come off from the highs, is actually at the day's low at this point in time. We do have L&T also, which is off the highs of the day. HUL, Nestle, Asian Paints, a lot of these consumption names are seeing lows of the day as we speak. There's also Wipro, which is not doing so well, so it has come off from the highs again. In the broader markets, though, the mid-cap index, where the advance decline ratio is in favor of the advances right now, we do have these Vedanta group stocks which are surging. So Vedanta Oil and Gas, which is logged in upper circuit. Vedanta Power is also logged in upper circuit. We do have Physicswala, which is up 5.2% in trade as we speak. Imagica World is the other stock which is up 5.5%. There is Pearl Global Industries, Acme Solar. So particular sectors in the broader markets which are doing well, and we'll keep tracking that for you. The markets are in an up move today, but with that, it's a wrap on this edition of Halftime Report. Business Lunch will take all the action ahead.
Stocks climb led by heavyweights after the US and Iran make progress in talks. IT services and oil and gas stocks lead the charge. Reliance Industries' deployment of AI across businesses and the scaling up of its new growth engines, deep tech, new energy and FMCG, along with the likely $4 billion Jio Platforms IPO, gets a big thumbs up from analysts. Voltas races past the 1 million AC sales mark in FY27 on the back of the heat wave and a delayed monsoon. LG Electronics also flags a good summer season for air conditioners despite a 10 to 12% price hike. The stocks of AC makers perk up. The number of oil tankers sailing through the Strait of Hormuz sees a distinct pickup even as the US and Iran announce a 60-day roadmap for a deal after talks in Switzerland. Brent trades below $79 a barrel mark. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. Well, it's a good day for the market so far, although, well, the indices are slightly off the highs of the day, but we are still holding on to levels of 24,100 as of now. The 24,200 is turning out to be a bit of a barrier yet again for the index, but no reasons to complain after the recovery that we made from the lows on Friday. So the good thing is the fact that we are holding on to A, 24,000, and B, that 23,800, 23,900 zone on the downside proved to be a very strong support on Friday's trading session. So that's something that the bulls would appreciate. There was a bit of an intraday dip on the Nifty Bank earlier in the day. That dip had gotten bought into, but since then too, the index has continued to remain around similar levels. There is no significant up move after that dip was bought into at around 9:30ish. The 58, around about a 300 point trading range for the Nifty Bank today. It's narrower than most days, and after it took a bit of a breather on Friday, it's still at the higher end of the range of 57,000 to 58,000. A lot of the broader market names are the ones where there is action though. There's a lot of stock-specific activity as we speak. Look at the Kirloskar group companies, all of them. Kirloskar Oil Engines, Kirloskar Brothers, Kirloskar Pneumatic, all of them seeing gains of anywhere between 10% to as high as 20%. And all of them are seeing very healthy gains today. Nosil is another one. That's another stock that's a newsmaker after that anti-dumping duty imposition on a very key material that it manufactures, a 20% circuit here as well. Well, of course, there are names like Subros, EMS, Igarashi Motors, all of these small cap names. And there are at least 20 small cap names that are trading with gains of 10% or more. But since we were on the subject of banks, the bankers are eagerly awaiting an FAQ on the RBI's FCNRB scheme to go ahead in full steam. Currently, they still have some unanswered questions on recycling the old dollar deposits and on the extent of leverage that they can provide. Lata is joining in on what more is worrying bankers about this FCNR scheme. Lata.
The bankers were expecting an FAQ last week, and up until Friday evening, there was a hope. A bit of a disappointment that it didn't come. This is regarding the scheme that was announced on June 8th, that they can raise FCNR deposits, which will be hedged by the Reserve Bank. The principal will be hedged by the Reserve Bank. The expectation now, of course, is that the FAQ comes this week, probably even today, is what they are hoping. Now, what do their doubts include? One is whether, old NRE deposits can be broken and recycled into new. Now, actually, the Reserve Bank almost explicitly forbade that because they want fresh dollars. But what the bankers worry is that an NRE depositor who's existing and is getting 5% and sees that another scheme is giving him much better will voluntarily come and break. So what do they do about it? Under the present scheme, they have to just let that person take away the money and maybe go and deposit elsewhere. So they're wondering if there can be a way out. I mean, it's a reality that we have to contend with. The other problem is about self-leverage. It's not very clear whether they can provide leverage to their own customers. Someone comes, raises a deposit, and they give him 5x, 10x loans. They're not very clear whether they can do self-leverage or only give leverage to a customer of another bank. There are some confusion about that and a whole host of other minor technicalities which they want ironed out in terms of hedging the interest which they provide and how that should be hedged, whether it should be hedged at all. All those are doubts which the bankers want answers for, hoping, of course, that they will get some answers in the FAQ today or sometime this week.
Lata, thank you for putting that together for us. Still awaiting that FAQ. Now, Vahan data for the month of June so far is suggesting that strong auto sales continue in that traction, especially in the electric vehicle segment. Sudarshan is here with more details on this. Sudarshan.
So it's been a good last few months for as far as the auto registration data is concerned, and Vahan registration data is indicating another strong month of June 2026. So far, the growth of the entire segment is likely to be more than 20%. The outperformance is expected to come from passenger vehicle, followed by two-wheelers. One segment that continues to do well is electric vehicle segment, and we might see a growth of almost 30 to 40%. So first, talking about the registration growth for the entire segment, total growth is seen at 20%, followed by two-wheelers at 19%. Passenger vehicle, as I told you, it will continue to outperform, and growth is seen at more than 20%. For commercial vehicles, growth can be 20%, while MNHCVs may underperform the industry, and growth is seen around 14 to 15%, and three-wheeler growth is expected to be 16%. Now coming to the company-wise, in two-wheeler segment, two companies that are expected to gain market share are TVS and Royal Enfield, while Hero MotoCorp can report a healthy set of growth. Even it can be the same for Bajaj Auto. Now coming to electric two-wheelers, it can be another strong month as far as Ather Energy is concerned, and for Ola Electric, it would be a fourth straight month where their volumes can be of more than 10,000 units. In passenger vehicle segment, two companies that are gaining market share most are Maruti and Tata Motors passenger vehicle. For M&M Auto, it can be a very strong growth in this month too, while Hyundai can lose market share. In commercial vehicle, Ashok Leyland is expected to lose market share, while Tata Motors commercial vehicle is expected to report a healthy set of numbers, and even on market share front, it continues to gain market share. In the tractor segment, there is a mixed trend. We are not seeing an impact of delayed monsoon, and the outperformance is expected to come from Mahindra and Mahindra tractor segment. Now coming to the segment which is a standout and continues to do well is electric vehicle segment. Now volumes are of, we have taken off two, battery operated vehicle and pure electric vehicle. So in the last 2 months, in April and May, growth was more than 40%. It was in the range of 40 to 50%. Even in the month of June 2026, volumes are already higher than what we had seen in the entire month of June 2025. So if you talk about April 2026, growth was 44% and total volumes were more than 2.5 lakh units. In May, growth was 48%. Volumes had increased to 2.76, and so far in June, volumes are already more than 2 lakh units. So it clearly tells you that one segment, electric vehicle, continues to do well. We still have 8 to 10 days to go. Let's see how the trend pans out.
And we'll keep an eye out on that for the next 10 days of the month. Sudarshan, thank you for that update there. On to news from West Asia. Then mediators, Pakistan and Qatar, say that the US and Iran have made encouraging progress on the first day of the high-level talks in Switzerland. They also said that the US and Iran have agreed on a roadmap for a final deal to be reached within 60 days, as well as a de-confliction cell to ensure an end to military operations in Lebanon. Now, CNBC's Dan Murphy has more with the latest. Dan.
First round of direct talks between the United States and Iran has now wrapped, and coming out of this, the two sides say they have a roadmap to move forward over the coming months. Now, according to a joint statement from mediators Qatar and Pakistan, negotiators at this Lake Lucerne summit agreed to try and reach a final deal within 60 days and a framework to end the war that is now in its 4th month. The mediators basically describing the atmosphere as positive and constructive. They say the two sides have also set up high-level committees to oversee the process, plus several working groups on things like the nuclear file, on sanctions, and of course on monitoring as well. Crucially for the oil market, the statement also says a communication line has been set up between parties aimed at the safe passage for commercial vessels through the Strait of Hormuz. And Iran's foreign ministry also says negotiators agreed on a mechanism to guarantee that passage. Now, of course, the devil is in the details here. The exact mechanism itself, the details of that mechanism, is still unclear at this point, but the market has certainly taken this in its stride, with oil prices cooling off in the last couple of hours. And that really matters because, of course, Iran declared the Strait of Hormuz closed again on Saturday over that series of Israeli strikes in Lebanon. And the shipping numbers from Kepler that we've been following show just 5 vessels actually transited the Strait on Sunday. That was down from around 26 the day before. So this on again, off again, open and then closed situation around the Strait of Hormuz cannot be the status quo. And it seems as if the US and Iran are attempting to work out ways to keep oil flowing again and to keep Hormuz open. Here's the Energy Secretary Chris Wright speaking on Fox News Sunday.
In the last 24 hours, or yesterday, 67 ships went through the Strait of Hormuz. The day before, it was 55 ships. So, and in terms of oil and oil products, about equal to where we were before the conflict. So, yeah, traffic is flowing through the Straits quite nicely. Now, that's because of a U.S. military presence. Iranians still have not demined the central shipping channel, but the U.S. opened a separate channel down south. And we've been escorting ships through that for several weeks now, and at very high levels today.
Secretary Wright on Fox News Sunday there. And crucially on the issue of Lebanon as well, the statement also says that parties will create a deconfliction cell with Lebanon and the mediators to hold the ceasefire there. That's really important as well. Iran's Foreign Minister Abbas Araghchi calls that the first real test of whether any of this will hold. And of course, I've also spoken with analysts this morning who have suggested that the situation between Israel and Lebanon right now really is the wild card here. If Israel decides to keep up its strikes against Hezbollah in Lebanon, then perhaps this could derail the entire peace process. So the United States, of course, working to ensure that Israel's needs are also met and that the Israelis are on side with this Iran diplomatic path.
Dan Murphy there with the latest updates from West Asia. Take a short break. On the other side, Jio Platforms has filed for what's likely to be the largest ever IPO in India. We'll get you more on the other side. Stay tuned. Welcome back. Now, from disrupting India's telecom market in 2016 to becoming a digital giant, Jio is now readying for its stock market debut. Jio Platforms has filed for what's likely to be the largest ever IPO of around $4 billion. Rima is here to tell us how this listing is set to be a defining moment for India's public markets and digital economy.
Nearly 10 years after its commercial launch, Jio is finally headed to the public markets. Reliance Jio commercially launched on 5th September 2016. Free SIM cards, unlimited voice calls, free data under its introductory offer. This launch transformed India's telecom landscape almost overnight. It triggered an unprecedented price war and accelerated the country's digital adoption. At Reliance Industries' latest AGM, Mukesh Ambani has now announced that Jio Platforms has filed the draft papers with SEBI for an IPO, and it marks a major milestone in the company's journey. Now, Jio's entry honestly reshaped the entire industry. Reliance Communications exited, SL went bankrupt, Vodafone and Idea Cellular merged. In 2020, Jio Platforms raised more than $20 billion from 13 marquee investors. We're talking about Meta, Google, KKR, Silver Lake, General Atlantic, amongst others. It was valued at $58 to $65 billion at that time. Today, investor expectations are for $110 to $120 billion in terms of valuation. Jio has gone from a disruptive telecom challenger in 2016 to India's largest digital platform with more than 500 million subscribers. And this IPO marks the culmination of what is one of India's most consequential business transformation stories. But now more details on the IPO. Well, it's going to be a pure fresh issue, 27 crore shares on offer, 2.9% equity dilution, no offer for sale, which means no existing shareholder, promoter or other investors like Meta, Google will be selling any stake. The primary objective of this issue is to pare debt. So they want to bring down their debt by more than 27,000 crore rupees. Now, ahead of the IPO, Jio's numbers show a company which is entering cash generation. Revenues stand at 1.46 lakh crore, having jumped 15% last year. Net profit at 30,000 crore, again a jump of 15%. Subscriber numbers stand at 525 million as of last year, with an average revenue per user at 214. But I think the number you need to focus on is the EBITDA less capex. Now that has jumped from 1450 crore in FY24 to 20,000 crore in FY25 to 42,000 crore in FY26. So from FY24 to FY26, we're talking about a jump of 29x. Now, what does this number signal? Well, it signals perhaps that the company's heavy capex days on account of 5G network build-out may have been behind the company. It may have peaked, and now the company is entering into a cash generation phase. Now, you know, for most investors today, you have limited telecom options. You've got a Bharti Airtel, you've got a Vodafone Idea. Now, Bharti Airtel is an investor favorite. It's a premium play, higher ARPUs, higher margins. You get the Africa and Indus Stars optionality. Now, where Jio scales or does better than Bharti Airtel is on customer volumes. Jio Platforms' active subscribers are more than that of Bharti Airtel's India subscribers. But Jio is more than just, mobile subscribers. It offers a play on India's digital economy. It's got mobile, home, broadband, enterprise, and AI all bundled into one. And honestly, it's one of the most awaited IPOs and the first IPO from the Reliance Group in nearly 20 years.
Rima, thank you for putting that together for us. Now, having set up over 3 million outlets in the last 3 years and growing to 22,000 crores in revenue in just 3 years, Reliance Consumer Products has become India's fastest growing consumer company. Mangalam puts that into perspective. Mangalam.
Dare to dream and care to execute. That's exactly what Reliance does. In an AGM where a lot of the spotlight went away into AI, new energy businesses, and the Jio IPO, the footnote, and which was actually, could be a big multi-billion-dollar opportunity for them, is the FMCG play. Reliance Retail has now become an FMCG giant. Remember, it's just been about 3 years since its inception. In FY26, Reliance Consumer Products Limited, which is their retail business, actually crossed gross revenues of 22,000 crores. This number was 11,450 crores in the previous financial year. So it's a near 2x jump that we've seen. So no company in the consumer space has actually crossed 20,000 in such a short span of time, and with the pace that Reliance has done. So that's exactly what has happened out here. 22,000 crore in gross revenue, 2x growth, fastest in the industry, and also the highest in the industry that we're looking at. And it's not just that, look at some of the brands that Reliance has actually grown in its consumer products business. Nearly 5,000 crores coming in for Campa. In some of the important markets, it's also crossed double digit in market share. It's among the top 3, top 4 aerated beverages players in the country. And then Independence, the food brand, also has done about 2,600 crore in gross revenue. So all of this, while reaching 3 million plus outlets and 5,000 plus distributors, is no mean feat. And if you compare Reliance's gross revenue to all the other companies, while all of them, the reported numbers are net numbers, so you have to take that into account. But even then, it is fairly admirable. 22,000 crore rupees stands in line with Nestle's 23,000 crore rupees, above Tata Consumer's 20,000 crore rupees, or even Britannia's 19,150 crores. And remember, these are extremely old companies in India for the longest time. If you compare it to some of the other players like Godrej Consumer, Marico, Dabur, this number looks like it is nearly 2x of that. And imagine a company doing that within just 3 years of its existence, organically and by acquiring brands on a gross revenue basis, 22,000 crores. But they're not stopping here. The near-term ambition is to go to 1 lakh crore in revenue by FY30 and become one of India's largest FMCG companies. Now, if you're looking at the multiples at which all the FMCG companies trade, and at 1 lakh crore revenue, this could definitely be the next multi-billion-dollar opportunity. And that's exactly what Mukesh Ambani said.
That's what they are aiming for. Mangalam, thank you for summarizing that for us on Reliance Consumer Products. A standard disclaimer playing out on your screens as well. Take a short break. Back with more news and updates on the other side. Stay tuned. Welcome back. On to some other important developments then. UK Prime Minister Keir Starmer is facing growing pressure over his political future after a decisive parliamentary victory by his rival Andy Burnham triggered fresh calls within the Labour Party for him to step aside. Starmer is now considering whether to fight a leadership challenge or set out a timeline for his departure amidst his plunging approval ratings. Adding to the pressure, US President Donald Trump has also predicted that Starmer will resign as Prime Minister. And the FIFA World Cup delivered another action-packed day of fixtures. Spain were in a commanding form, putting 4 goals past Saudi Arabia with teenage sensation Lamine Yamal opening his World Cup account. Uruguay were made to work hard by Cape Verde, with the World Cup debutants pulling level twice to share the spoils at 2 each. Now in Group G, Egypt put 3 goals past New Zealand to strengthen their knockout hopes, while Belgium and Iran cancelled each other out in a goalless draw. Matches on the cards today include Argentina taking on Austria, France taking on Iraq, Norway meeting Senegal, and Jordan squaring off against Algeria. And with that, we take your leave on this edition of a Business Lunch. The market still holding on to gains of around 100 points, around that 24,100 mark on the Nifty. From me and the team, thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Vivek Iyer. Vivek, good afternoon. 24,100 mark. We are comfortably above that for now. A wee bit of downtick from the highs of the day, but nothing major to worry about. The advance decline ratio in favor of advances. So it started on the front foot as far as Monday is concerned.
Right. Good afternoon, Sonal. Absolutely right. And the big fall that we saw in IT has been reversed to a certain extent today, and that's aiding the market recovery. And of course, big boy Reliance, after the AGM seeing quite a strong uptick, that too is helping the markets move higher. But a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Falling crude prices, risk on mood. Nifty holds about 24,100 as small and mid caps march higher alongside frontline indices.
One order, one new market, and potentially a whole new growth trajectory for Kirloskar Oil. A marquee 192 megawatt data center order keeps stock locked in 20% upper circuit. Street takes note. JM Financial and Motilal Oswal lineup upgrades on the counter.
India's largest rubber chemicals maker, Nostle's biggest regulatory overhang, may be nearing a resolution with anti-dumping duties on key rubber chemicals receiving government backing. Stock skyrockets.
Voltas kickstarts FY27 in style. Summer heat translates into record sales. Company sells over 1 million air conditioner units within a single quarter.
Fresh wins in the thermal power segment sent shares of power mech projects higher. With nearly 16,000 crores worth of orders in the hand, the company has now added another marquee project worth over 1,000 crores from JSW Thermal Energy. The order reinforces revenue and execution visibility over the next few years.
Okay, all right, those are the top headlines that we are tracking. The big move on crude oil prices and the mid caps as well is something which is keeping markets afloat. IT also continues to do well, but a lot of action in the broader markets. Let's go across to our colleague Upasna, who's here to take us through the mid caps that are moving around in trade. Upasna.
Well, firstly, let me address the mid-cap index. It's up nearly about 0.3% as we speak. So let us focus on the top gainers in today's trading session. First up, placing the light on NIIT Limited continues to remain in focus. Was in focus last week as well. The stock is up nearly about 12%. And if I look at the 1 month move, it's up nearly about 55%. Next up is EPAC Durable, certainly in focus as company's key client, that is Voltas, has reported more than 1 million sales unit in this financial year. That is in just about 3 months. So certainly the stock is up on back of that, up nearly about 13%, and the volumes are also quite high. They are up nearly about 27 times the weekly average. Nostell also in focus, up nearly about 20%, is also one of the key volume buzzers today. Volumes up 98 times the weekly average. And now moving on to New India Assurance, the run-up continues this week as well. Was in focus last week also. The stock is up nearly about 5%. And lastly, PP Fintech, that is also seeing a dash of green on the counter. So next up, let us look at some of the fertilizer stocks. They are also seeing huge gains today onwards. GNFC and FACT, both of these counters are up nearly about 2 to 4% as we speak. And now on the flip side, let us place focus on some of the top losers in today's trading session. Topping the list is Bazaar Style Retail is down nearly about 5%. Craftsman Automation, Saskin Tech and Rosari Bio, all these counters are seeing deep cuts of nearly about 5%. So all in all, these are the stocks that are on our radar today on the back of this.
Okay, all right, take that point, Upasna. But let's talk about Viyash Scientific. Vivek, you have a story here, a big stake sale.
That's right, a big stake sale, a big block deal in the offing over here. Now, Viyash, Scientific, now this particular name, viewers will probably know that this particular stock was earlier known as Sequence Scientific. A whole host of corporate developments, corporate actions has happened in this particular company. And right now, the current promoter is a private equity, which is Carlyle. So what we understand from our sources is that Carlyle is looking to sell close to 10% stake in the company. We understand that there has been quite a bit of strong interest coming in from a clutch of mutual funds as well as strategic investors who are keen to acquire stake. Now remember, Carlyle now owns over 61.3% stake, and this particular stake, number one, came in from Carlyle's 53% stake that they had post the acquisition of Sequence Scientific, post which the company went ahead and brought in Viyash Life Sciences into its fold. After that, you did see Carlyle's stake go up to 61%. The stake is held through two arms, CA Harbour Investments as well as CA Hull Investments. We've reached out to both Carlyle as well as VS Scientific for comments. We are awaiting a response from both of these names. But interestingly, one thing that we need to keep an eye on June 25th, the company has held an investor day. This is, number one, to address a recent acquisition that they made from an Italy-based company. The company is present in the animal healthcare space. So on that particular day, what is the growth trajectory forward is something that the street will keep an eye out on.
Okay, interesting. We'll keep tracking those meeting updates and, of course, what Wake brought for us as well. That's about Vyash Scientific. But let's move forward and welcome Ruchit Jain from Motilal Oswal Financial Services for a technical check. Ruchit, what is the next important level on the Nifty that we are tracking?
Yeah, hi, very good afternoon. Well, if you look at recent